All right, good afternoon, everyone. This is your host, Sherry, with Traders Exclusive Webinars. And I want to welcome you for today's Traders Exclusive Strategy Series webinar. Today's expert traders are going to show you how you can trade like a hedge fund trader with the Alpha Fibonacci system, learn to utilize the market's true volume, option-oriented indicators and what they're saying about the market now, and trade frequently and understand overall market patterns. Please check our website, tradersexclusive.com. It's where we put articles, video clips, valuable trading tips and techniques. They're all free. And that's also where you're going to find a recording of today's webinar. And before we get started, I'd like to share a quick disclaimer. You know we got to do it. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, recommendations presented here are subject to change at any time. Past performance is not necessarily indicative of future results. I would like for everybody to please take notes with a little bit of context with them and hold your questions till we get to the question and answer period at the end, and that way our speaker will not get any interruptions. And our first speaker today is Simon Jousef. He's of the Trader Institute. He's bringing us a presentation, Volume Profile Simplified for Futures and Forex with 1,000 plus ticks, pips a month. Now, Simon's the head trader and trading educator for the Trader Institute. He provides day trading signals, market analysis, and education. His first public class was in 2004, and by 2010, he had to switch to online conferencing due to global demand. Simon focuses his education and training on the core of what moves the markets. We know it's all about buying and selling, so volume or volume pressure is key to understanding the markets, right? The market makers are the ones who control the moves, and with his dynamic math-based indicators and system, you can see the moves ahead of time. So welcome, Simon, to the event, and I'm just going to make you the presenter, and I'm also going to make it so you can see. You can, okay, now you're unmuted. I can see your screen. How are you today, Simon?
Good. Just extremely distracted. I just called a couple of trades, and but I will go over those. I do my trade calls when I'm not in the room with my students. I do them here on the Telegram channel, which we will also talk about. So I was just all over the place trying to find the stops, entries, and targets, etc. So welcome everybody. I hope the audio and the video are okay.
I can see you and I can hear you, so I'm going to mute myself and you take it away.
Thank you so much. We'll talk about volume profile and how simple it could be if you have the proper tools to utilize for futures and forex. Now, the 1,000 ticks or pips a month, it's really not a very big deal because I focus on longer, bigger trades. So grabbing 1,000 ticks a month has been really achievable, and it's been easy. For example, gold, I called it long. Let me give you an example of how easy this is. This is the YM, which I just called long, but I will show you. Gold, if you look at this magenta line, this is gold forex, and we have also gold futures. I called it long, and my aim is 1912. So if I go from this price, which most likely it will, we're already up about 70 ticks, and we grabbed first target, etc. So if I achieve this one trade, that is almost 1,000 ticks combined between the three contracts that I'm calling. That being said, let's go back to the presentation. So 1,000 ticks is not hard to achieve. I'm not going to be selling anything today. There's nothing to sell. We don't sell anything unless basically you buy after the trial. Basically, you buy. We have different offers, different packages. but main thing, we offer trials. If you want to join us, if you want to learn what we offer and what we do and how we do it, if you're interested, then please, you go to the website. This is the website. Basically, click on the two-week offer, 2-week trial, sorry. The 2-week trial, you click on it, it will prompt you to, an email, but we have a couple of videos I want you to watch. One of them is immediately this video, but if you go to the education page, which is right here, you see I have the first 2 videos. I have many videos on this, which I highly recommend that you view them. They are for free, you can learn a lot, but first 2 videos are important. This one is what to expect in the 2 weeks trial, because what we do is unique. It does not involve any technical indicator. We use some technical indicators, but main decisions come from volume and the hidden pressure inside the market, which we will also talk about. First video is important, second video is important. There's another video that I want you to pay attention to, and I say it jokingly, but I really mean it. This video here, adult ADD and how it manifests itself in traders. This video, unless you're getting married today, you need to watch it. Seriously. This has been done for us in 2014 by Dr. Kenneth Reed, and it's still a very powerful video, very, very powerful video. This is about psychology of traders and how their ADD prevents them from being successful. Now, this video helped me in many aspects in my life, but trading is something that you're attending a webinar for, so it will apply to your trading. It's very, very important. So first video, second video, and then if you can have a chance, watch this video too, and we have the rest as well. Going back now to the actual presentation. When I started in 2001, I started with Forex, switched to futures after. I was still doing futures, but the currencies in the futures market. In 2005, I spent 6 months trying to understand one simple thing of this market, which was the tape, the bid and ask ladder, as you see. I spent 6 months understanding it. My background is physics, so I wanted to understand how these numbers work. It took me a long time, but I developed a few things from my understanding. I developed a price magnet indicator. I developed end of buying, end of selling, unfinished business, capping, traps, point of controls, all of them from this tape. It was a very complicated thing. It still is, because you need to monitor it, but I simplified it. You will notice that the price magnet indicator is tremendously simplified, and it changed to something I call now the SAL indicator, the attraction level, SAL indicator, Simon's attraction levels. And you will see them live today, and how I called my couple of trades, or 3 trades today in the swing side, okay? Because we also can do some scalping too. All right, so moving forward, do you trade support and resistance? Of course, everybody trades support and resistance, but the problem is, what is your support level? How do you honor it? What is your resistance level? Do you trade with indicators? I do, but my indicators are volume-based mostly. Let's examine why most indicators don't work, and it's simply because most indicators are designed on other indicators. Now, if you see this, John gave me a testimonial long time ago, and that applies to anybody who first comes to my trial. They will understand. They will see this. He says, when you are trading and watching your normal charts with lagging indicators, often the market will reach a point where it does something you just can't understand or predict. You don't know why the market did that. However, using volume profile the way Simon does gives you a window to otherwise hidden currents that drive the markets. So he was saying, quit reacting, be a proactive trader, and you will see it differently. Now, 3 main steps to our strategy. 3 main steps to our strategy. Step number 1 is anticipate. It's very simple. Anticipate, confirm, execute. If I anticipate a trade, that does not mean I'm trading it. I have to confirm it. Let me give you an example of what do I look for anticipation. I'll give you a very good example. Let's look at the NASDAQ. You see this NASDAQ move? Do you see this arrow? This arrow, it's not something I drew now. Let me tell you what the top was. The top was, let's say, around 14,100 on the NASDAQ. And I said the NASDAQ is coming back down here. And this is not something I just did now. I'll tell you. You see this price? You see this chart? This is June 16th, just today, just now, this morning. This is the NASDAQ at 10 a.m. Look at this. It was right on the top. You see this? I said the NASDAQ is coming down. This was a live chart at that time. This is it. This was then 10 a.m. Now it's 1:12 p.m. Look what happened. It came back down here. And in fact, I called it long from here. I called it long from here. It did not touch exactly my entry. I missed it by a few ticks. But if you see, look at this, my elite members. Look, Neil says he got it. He took it. Here, he said he took it from 77.50. It's already 20 ticks, but now it's already up about 200 ticks in favor. I'm looking for a big move. Leah took it, and they started, because everybody is different in terms of executing these trades, a few ticks apart. But regardless, if you are able to anticipate a move like this ahead of time, what can you do with that? Is that enough for trading? If you look at my indices channel, just now, a few minutes before I logged into this webinar, 12:40 p.m., which is 20 minutes before 1 before I started, I said long YM possible, YM being the Dow. This is the Dow. Long YM possible. And not only I told them that, I gave them the view. I said, this is my long. See the price? This is a chart, live chart at that time. Look where the market touched, to the tick. I said, I'm not going to be available. I'm starting my presentation. I told them to have us. I gave them the exact stop, and I told them take first 20 ticks profit to secure the stop. So we took first 20 ticks. We're done already. Now we moved the stop loss higher. I said move the stop loss to this price, which is, I told them here. I said move the stop loss here, right? I look. I typed it in the elite members chart, and I can just type it there too, right? Done. So now we have a secure trade. Now, throughout the presentation, hopefully I'll have enough time. I'll explain to you a few things that make this possible. That's why getting 1,000 ticks a month is not really hard. If the YM moves in favor, that is 400 or 500 ticks. If the NASDAQ moves in favor, that is a big, already 200 ticks up. And we're already about 800 ticks up for the month, right? You see this? Going back to the presentation. So anticipate, confirm, execute. How do I anticipate the market's move? Let me explain, show you something very important. Let's look at any chart. Let's look at, for example, the Canadian dollar. Canadian dollar. This is the Canadian dollar. Just an example for you to understand. This is a 120-minute chart, Canadian dollar. What do you see here? You see a volume profile that you could enlarge, you can minimize, you can sharpen the edges, you can smoothen the edges. You see this? Now, that being said, what else do you see? First of all, if I look at only one day, this is 1 day of trading. See this dotted line? This is the amount of volume that I see on the volume profile on the right hand side. Okay, but the more I bring in data, the more I see. You see this? The more I see. Now this is reading the rest of the candles. Gives me volume. Now what does this tell me? What does this view tell me? By the way, this view is Canadian dollar in the futures market. I'm also looking at Canadian dollar FX pairs. Look at this FX pairs. Same thing. Same idea. See that? Same idea. See that? This is FX. So I'm looking at the pairs and the futures market too. Now, what does this view tell me? This view tells me that there is colors. There are different levels, different waves, right? So if I bring my pen, I have a level from here to here. My pen is not dark enough. Let me change the color, please. Choose a pencil color. Let me make it burgundy. So I have a level from here to here that looks the same. So if the price goes through this, I'm expecting it to continue all the way up. And and after that there's a wall, the wall, and there's another level that is different, and there's another level. So this level, and there's a level that is from here all the way here that looks the same. So throughout my studies, throughout my years, I divided this into, and we have, look at the bottom, they have something called section 2. I divided this into 2 zones, okay, major 2 zones. Continuation zones, C, and then rejection zones, R. Very simple, very straightforward. It could be a small continuation zone such as this, or it could be a big continuation zone such as this, okay, or something like this. But by the way, in between of these continuations, there's something called rejection, okay? And I will try and explain it in further details. However, for anybody who misses this, I give you 2 weeks of free trials where you can ask questions, you learn more, you understand more, okay? Let's go back. Now, how do we trade, and how many contracts? That's important for the next step to explain. My trade calls are based on 3 contracts. I'm saying this because it's important for you to know this before my next explanation. 3 contracts. 3 contracts that when I call the trade, I call stop loss. I call the stop first, or usually exactly with the same trade. Sometimes ahead of time I call the stop. If you see this here, if you see the NASDAQ, I said my stop, I will show you later. Anyway, I call the stop loss, I call target 1, and I call target 2. Target 1 is on 2 contracts. So if I have a 20 ticks, if I have a 20 ticks target 1, so if target 1 is 20 ticks, in fact, I'm making 40 ticks profit. So 40 ticks profit on target 1 means my stop loss usually is secured, because my stop loss would be within 40 ticks, sometimes more, but as soon as we take 40 ticks, I'm going to move my stop loss in a way that even if it goes against me, I'm safe. And the example is the YM trade that I called, right? It gave me 20 ticks on first target just now. Now it's slightly back to the few ticks in the negative, but even if it stops me out, it's going to be a safe trade, because I will be losing on the runner less than what I made on the first target. All right. However, it's a very strong support. I'm expecting it to go in my favor. So that's out of the way. Now you understand. First target is on 2 contracts. So if I make 15 ticks, 20 ticks, or 30 ticks, that's double. Okay. Next step is, how do I utilize the volume profile and my strategy? Most of the traders, they use technical indicators. Let's stick with one that everybody's familiar with: Fibonacci levels, right? Everybody, let's say, is familiar with Fibonacci, fibs. Let's assume that you are looking for a long, right? You're looking for a long on the gold, and the gold has gone up, down, up. Now you're looking for another long on the gold, and you have levels of Fibonacci. One of them is here, the other one is here, and the other one is here. Typically, you will look for a trade with the standard amount of ticks as a stop loss. You will look for a trade here, and typically you're looking for, let's say 20 tick stop. The market goes to this level, you get in long, but it continues against you. You get stopped out. It comes back again to this level. This is your 50%. You say, okay, 50% is amazing. I have to have it. I have to have it. Because in this time, the first one failed 38%, 50% will not fail. You take the trade, it goes this way here, and then it stops you out. Now 2 stops. All right, it goes up again. You say, no, no, no. See, it's honoring it. It's respecting the 50%, but I might to re-enter. So you re-enter again, just to your surprise, it comes back and stops you out because you trade with standard stops. You don't understand volume. Not you. Don't take anything personal, please. It's just a presentation lingo. All right. So we use something called smart stops. Smart stops. Right. So you get stopped out, and finally the market goes in your favor just for your surprise, because now you don't want to trade again because now you're gun shy, or you're lost enough. You don't want to get in. You're stressed out. You missed this whole 500-600 tick move. When you understand volume, you will understand a few things. Let's go back to the same level, and let's go back and show you when the gold moved historically, it created a few levels. One level here, okay, as I showed you in the previous chart, that is a continuation zone. We call it C, continuation. And there's another level below that is also continuation, but it's different, but it's still continuation. As I said, I minimized the volume profile to 2 levels, continuations and rejections, right? In between, there's something called rejection. And let me mark it as a bubble right here. This is your rejection zone, okay? R. You notice the market comes back down here, while some of you would take it because this is a Fibonacci level. Look where it is. It's in the middle of a continuation zone, which means you are not going to take it because you can't. First of all, it's a continuation zone. You don't have a stop loss here. Even if it's a random stop, it's going to get taken. My favorite stop is going to be where the blue line is, right here. This is my favorite stop, blue line. You see this? This is my favorite stop. So why would I take it here? Why would I take it at the first Fibonacci level? Now look at the second Fibonacci level. Are you going to take it? If you take it, it's okay, but look at your stop loss. So why don't you wait for it to come back down to the rejection? See this? This is where your trigger is. Now, this is how it's going to behave, and it's going to continue. Now, when we got to this level right here, do you think that is enough for me to trade it? This is only anticipation, level 1, anticipate. We still have the next level, which is what? Which is confirmation. Anticipate, confirm, execute. So now I'm looking for confirmation. Confirmation comes from what? If the market makers or market movers are buying or selling, you will see it here. How would you see it? With the proper volume indicators. So when the market gives me that, this is when I would enter. There we have a couple of techniques that we use, okay, for this. And this is basically one of them, you know, waiting for the buyers and sellers or activities to happen. You have to see them. An example is this. Look at the, for example, gold. Gold at 120-minute chart, what do you have? You have two magenta lines, major magenta lines that gave me the longs, right? You see this? This one here, I'll remove this line. I don't need it, just for you to see the magenta lines. I'm talking about a long-term trade, so this is it. This is your long-term trade level. Again, level. These come from a certain indicator that you will have, you will see. It's available for Sierra charts, and it's called Simon's attraction level SAL indicator. Okay, it's very important for you to see this to confirm your trades with. It's very, very important. Let me give you an example of the Canadian dollar. Canadian dollar and the future side, and I have USD CAD. This is USD CAD, not Canadian. This is US versus the CAD. So US is the base currency. Do you see the attraction? Do you see the anticipation that the market is going to go to? You see this? I have a level that the market is going to go to. This is, but how do I confirm? I want to wait for the market to come to a level where that will show up at the bottom as well for me to confirm it, right? If I look at Canadian dollar USD CAD Forex side, do you see where it bounced from? Let me remove this. These lines are mine for audio purposes. I hear it before it touches the area. But look, USD CAD, look where it touched and bounced. Look at the Swiss franc. Look at where it touched and bounced. USD Swiss franc. The pound. Look at where it touched and bounced. Do you see these? This is, let's look at gold futures and gold FX. This is gold FX. Sorry, gold futures, GC. Look at GC on the Forex spot market. Look where it touched and bounced, right? YM. This is the YM in the futures market, which it gave us first target. The runner somehow stopped us out now, but we made about 15 ticks combined on this one. That's fine. But look, there's another chance coming. This is US 30 in the CFDs. If you don't understand CFDs, I can explain later. CFDs are equivalent to the futures and indices, but in the spot market. I don't think they're available in the States, but they are available anywhere else in the world. I see them. I'm Canadian, so I can trade them too. So instead of trading the futures market on the YM, I can trade the spot market. Okay, and here it is. It's coming now for a long. This is a very good level for, if I remove this, this is a very good long on the YM right here. Right? This is now happening right in front of you, which is on the future side, supposed to be here. To just touch that level. All right, so this is your future side possibility long, right at the very bottom of right here. All right, so let's wait for this, because now the buyers came in. You see this right here, right here. So let's hope, let's see it in action. Okay, now move on. Let's move on to the next. Now anticipate, we said the levels, continuations versus reversal levels or rejections. Confirmation, I told you what we look for. Then execution. I explained how we execute the trades, right? I explained we do 3 contracts. We try and be as safe as possible. We take first target, let's say, at the first hiccup that is against us. There's a lot of details into this. That's why I highly encourage you to join the trials, right? Highly encourage you to join the trials. I explained how we trade, how many contracts, and how I manage my trades. For example, how I manage the trade. Let's assume that I was not doing this presentation, right? I would have said, typed here, I would have said YM long again, stops at, I would see my stop, let's say here, I would pick a number below this magenta line, right? Because it's already gone about 15 ticks from the bottom. You see this? It's already gone 15 ticks from the bottom. And then that would be 15 ticks in favor. I would say take T1 at, for example, this price, or 25 ticks plus 25. Plus 25 means I'm already making 50 ticks, right? And if you see, everything is here. Now, before you join the trial, you can now go to the website. This is the website here, right? This is the website. If you go to the website, if you go to the main page of the website, there is a free Telegram channel that you can join right away without asking for any trials. Here, free updates, free trade updates on our Telegram channel. All right. If you click on it, it will take you to Telegram. You can have it on your phone, on your computer. But then this is not a trial. From that, you can ask us for a trial. You can talk to me. You can chat with me. You can talk to our staff. I also recommend that you follow us on YouTube. It's on the website, right? What else do we need to know? I think I still have about 15, 16 minutes left or so. I have a handout that I gave to Sherry. If she can share it with everybody, if she can hand it to everybody, that'll be great. This handout will have information about our website, information about what you need to watch before you join us, a few things that will be beneficial to you. I will try and maybe post it if I have. I don't know where I would find the attendees. No, I want to find the questions. I can't find the questions. Never mind. Maybe Sherry will read the questions for me if there's any. So that being said, what's next? What's next? I usually don't prepare for presentations because I've been doing them for a long time. These are some pictures from the old days. I was a puppy. This is 2006. This is local, I think in Brampton or Mississauga. This is the same thing, Brampton and Mississauga, somewhere in Ontario, Toronto area. This is in Colorado. I did a live presentation. That was, I think, excuse me one second. That was my last presentation I did live, I think. Except maybe I did one also in Las Vegas. Yeah, 2013 and 2012. I did some local presentations just for free for some organizations here. Psychology is very important when you utilize this method, which I just showed you. By the way, when you utilize anticipate the market, when you learn how to anticipate the market, what happens first thing? Here's what's gonna happen. I told you the market, the YM is gonna go up, right? I told you the YM is gonna go up. Even if it stops you out after, you already made some profit. So the runner could be stopped out, still making profit. You understand? So when you understand there's an anticipated price here and there's confirmation, right? Why would you trade it from here? Why would you trade it from here? What's the reason? You already see the confirmation at the bottom. So your psychology part is taken care of. You're not gonna go, I wish I had taken this trade. Why did I panic and exit too early? I don't like trading currencies, for example. Once you see some of the currency calls that I make, you will like them, right? I already made a pound yen and a euro yen today, but they have not triggered yet, right? So there's a lot of things that you have to work on to be able to achieve what we achieve. For example, if you join the trials, right, and you have 1, 2, 3, 4, 5 channels to join, but then some in the past, some trial members I will see them just on the indices. I will not see them joining the rest of the trials, not the rest of the channels. I'll ask them, why do you do that? They will say, oh, I only trade the NASDAQ. Well, if you're only trading the NASDAQ, what if I don't have a NASDAQ trade for that week? I have gold and I have YM and I have, for example, oil. You're not going to join because you say Simon did not achieve anything. So if you join us, you have to join all the channels. Even if you don't, I don't want you to trade my calls. I want you to monitor them. I want you to see them. I want you to understand them. And then once you join, you will have a full access to the members area, and you'll have full access to questions, and you can ask us. This is the members area, folks. Let me refresh it. Members area will include a ton of information. Level 1, how to get started, right? And then here, how to get started, level 1. It has multiple videos, basics, each indicator, how it works, each indicator, how it works. Level 1 in my members area is offered to you for free. I'll show you. If you go to About Us, if you go to Education, level 1 of this is called TTI Many Indicators and Contribution to Our Success. This is the video. This is, I think, a 50-minute video. The difference between this video and the members area video is that it's cut out. I cut these 50 minutes into different segments, but you will have it all in one video here, which is video number 1, 2, 3, 4. Number 4 is the video that you need to watch to learn about indicators, our indicators. How do you utilize them? And then I go to level 2. Level 2, starting point. Level 3 is important because it's advanced profile. Look, level 2, just one video alone, it sums up everything. Crash course on volume profile. This was made long time ago, right? I think 2 years ago, but it's still valid. It's still the same. And then what is the ACE method? Using volume profile, and we have recorded trainings. So we have a lot of information. The indicators that I offer are all available on NinjaTrader 7, except for the SAL indicator. The SAL indicator, folks, I cannot program it for NinjaTrader 7. The SAL indicator, which is the one that you just saw in action, which gave me that long on YM, right? I don't have it on NinjaTrader because NinjaTrader's programming didn't allow me to do this. However, there is a third-party indicator that could be used similar to this called, I think it's called Jigsaw, I think. It's very complicated, but it does what this simple indicator do. And this one is included in your package, by the way, if you join us. We have different levels of entries with us. We have just trade calls as well. You don't have to buy the whole package. But again, once you join us, then you can decide. I'm not going to sell you anything unless you decide for yourself after you join us. Okay. I have, I think, 5 minutes left. If there's any questions.
We do have some questions for you.
Sure.
I've got one that says, hey, Simon, I'm in your trial right now. I also went through your free education page and I'm absolutely loving the Telegram channel, how accurate all your calls are. Quick questions. Do you offer a payment plan and what's the typical learning curve? And that's from John.
Yeah, hi, John. Yes, I know you're enjoying it. Listen, yes, we do offer payment plans. I have, we don't reject anybody as long as it's reasonable. My thing is to teach you to learn. If you think you'll benefit from it, yeah, we can talk about that.
Cool.
Yeah, Dave said, how many days back do you? Oh, Nasdaq. Oh, Dave is asking how many days.
Yeah.
I go back in
the 60-minute chart.
Yeah, well, listen, I go anywhere between, let's say this is the NASDAQ, this is the YM. Let's go the YM because I called it long in front of you, right? Live in front of you, right? And it's gone up already, right? So see how it's gone up? Now, if I look at the daily chart, this is historical data. If you look at how many days I look at chart setting, I'm looking at 4,350, 80 days. This is I do that because this is historical data. This is not intraday. For intraday, on Sierra chart, regardless of how many days, but you're limited to their intraday capacity. I try and go for 500-600 days, right? This is 5,000 days, but it doesn't go more than 500 days, I believe. I'm not going to change it now. But again, I look for longer term, Dave. I want to see my very long term entries, levels, and charts. Okay, that's to me very important.
So we got one from Ken
How
also who wants to
much does it
know,
cost? I see
should
that.
should he email you about that?
Yeah, I mean, I am. You can email me, Ken. You can join the trials. It does, Ken. It does apply. I have. You know how many students I have? They use it for ETFs. Yeah.
So Ken
Yeah.
also asked, does volume
Yeah.
profile not apply to stocks? And you just said it does, right?
It does because, for example, if I'm trading the Nasdaq, I have so many students. I have hundreds of them right now on Telegram. For example, on the elite members, I have 141. Just follow this channel. These are, and a lot of them, folks, trade the QQQ, for example, and they will use it for that. But in terms of stocks individually, I don't trade them. But you can apply some of these to the ETFs as well.
And then the last question that Ken brought in was, isn't the margin for holding futures contracts overnight very expensive,
It is.
especially when you could be talking about 3 contracts per trade?
It is. First of all, Ken, I don't keep the 3 contracts. The first 2 are out very soon from the trade because we try and take first target. The runner, you can exit before the margin increase, before the market. You can. A lot of students exit ahead of time. But if you have enough margin, you can keep it. Or, for example, today, I'll be very quick. I know I have a few minutes. Today, I had a metals call. Watch this. Gold. I said I'm doing long on. I'm Gold FX doing 2 entries long. You see this today at 9:00 a.m. 9:01 a.m. So I chose the FX side because there's no margin increase on the gold, which is, everybody can trade, right? Do you no, I don't have Ninja Trader 8, unfortunately, no. You're
So
welcome.
Dave asked, do your tools work on NT8?
No, I
So
don't.
yeah, that's cool about knowing the timing to get rid of the first 2. How do you decide which of the 3 to get? I mean, is it all about first in, first out
It's
when
about
you're talking
what's
about your
the first
contracts?
hiccup against me. For example, if I have no, 2 are automatically out first target. Let's say if I have a hiccup against me at 15, 30 ticks or 30 ticks, I will tell everybody take your first target at 30 ticks or at this price to be particular.
Okay.
And
Okay.
sometimes the charts gets busy. I have a lot of tools to help them scalp and also long term as well.
Awesome. All right. We are right on time. Is there one more question? Does anybody have one more question?
If you don't have questions, please go to the website and
I did
learn.
put the link in the chat
Excellent.
for the PDF, but you also gave them the link for the 2-week trial, right?
Here, it's right on
It's
the
just the
website.
traderinstitute.com. It's just right there and it's right in the header.
Yeah.
So, I mean, I don't know how you can beat that. So thank you so much for being with us, Jousef, Simon.
Thank you so much, Sherry. Thanks, everybody. Enjoy your
You
day.
guys have a good day. Thank you. All right. Oh, I gotta make myself. All right. Bear with me for just a second. Our next speaker is here. I just wanted to remind you that we were just listening to Simon Jousef. He talked about the volume profile simplified for futures and Forex with 1,000+ ticks and pips per month. And you've got the link in the chat and you can go to his website and take advantage of a 2-week trial. So I don't think that gets much better. So our next speaker, I'm really happy to welcome Lawrence G. McMillan of McMillan Analysis. Oh, first of all, sorry, just a second. I needed to let you guys know that if you have to leave before this is over, it's okay, because we're going to be putting a replay up. You'll also get a notification from GoToWebinar that you can watch it. It's tradersexclusive.com. You go here to the right side where that green arrow is. It's not, there's no green arrow on the website, but you just go to that, and then you click on the yellow, orange letters, and you go, that'll tell you what the next upcoming webinars are. But there's also check out our past traders webinars here. You click here, and you can actually see all of the videos and all of the webinars, and you have access to them from now on. So that is my housekeeping. I want to welcome Lawrence G. McMillan of McMillan Analysis Corp. He's going to be talking to us about what current option indicators are saying about the market now. And Lawrence is a professional trader. He's the founder and president of McMillan Analysis Corporation. He's a registered investment advisor and a commodity trading advisor. He's an active trader of his own account. He also manages option-oriented accounts for certain individuals. Mr. McMillan speaks on option strategies at many seminars and colloquia in the US, Canada, and Europe. Prior to founding his own firm, he was a proprietary trader at 2 major brokerage firms, primarily Thompson McKinnon Securities, where he ran the equity arbitrage department for 9 years. Mr. McMillan is perhaps best known as the author of Options as a Strategic Investment. It's a best-selling work on stock and index options strategies, which has sold over 200,000 copies. In a research capacity, he edits, contributes to his firm's publications, Daily Volume Alerts, The Option Strategist, and The Daily Strategist. It's a derivatives product newsletter covering equity, index, and futures options. Mr. McMillan is quoted in publications such as the Wall Street Journal, Barron's Technical Analysis of Stocks and Commodities, Data Broadcasting's Exchange Magazine, Futures Magazine, TheStreet.com, and Active Trader Magazine, to name a few. Thank you for being with us today. I think you are now unmuted.
Thanks, Sherry.
I'm going to turn you into a panelist. Poof. A presenter, I mean. And you should be able to share your screen now.
Yeah, I just
And there we go.
You see it? All right, good.
I see the current state of market, predicting options indicators. Awesome.
Right, so we're going to discuss the market, what our indicators are saying about it. We've got like 45 minutes here. Just as a little bit of background, when I started this company, which was 30 years ago, we started out as a derivatives research firm, mostly data, sales, and some recommendations, newsletters, etc. But after 2008, we moved into money management, and we also have a fairly active option education facility, including like seminars like this and also mentoring. Last year, our managed accounts were strongly up for the year, and that didn't just happen on the recovery. We were actually up in March, and our newsletters had one of the best years ever. I'll talk about that a little bit later. The offer that we're going to make today, though, I'll come back near the end to quantify this, is we just recorded a new 14 webinar home study course, and so we're offering 50% off on that, and that's all new information or up-to-date information. All right, so let's talk about the market. Now, there's 4 things I look at, one being the chart of the S&P. That's the most important thing going. No matter what your indicators are saying, you have to be in line with what the market's doing. Then we're going to look at put-call ratios, breadth, which we have a little bit of an option twist on, and then volatility, primarily VIX, but some other things to do with volatility as well. So, and while we're going through these things, I'll be mentioning in some cases, this might be oversold, this might be overbought. But mostly in these current times, it's overbought. But oversold does not mean buy. In other words, like last year when the crash happened in March, the market was really oversold after the first few days of the market heading down, but it went down for nearly a month, and so it was not a good idea to buy in the first time it was oversold. Conversely, overbought does not mean sell either, and we're more in that condition right now. Some of our indicators. So we wait for a confirmed sell or buy signals before we act, and that would be a good rule to apply to your own trading, no matter what kind of indicators you're using. So here's a 2-year chart of the S&P. You can see there's only, on this chart, only been one oversold condition. That was last March. If you went back a little bit to December of 2018, there was also a very big oversold condition, but it doesn't fit on the 2-year chart. On the other hand, we've had several overbought conditions. One was about a month before the top in 2020. Then we had one pretty much simultaneous with the high in September. And now even though we've been getting overbought conditions, the reflex in the market has been rather small. So we had one in February, and then we had one in April, and really the market's done nothing but go sideways since then. So one of these days it will react strongly to another overbought condition, but it hasn't really been doing it yet. So these blue lines on the chart are what I consider to be important resistance or support levels. We had resistance here at the old highs in the S&P, which is 42.38. That's this number right there. And we've just kind of edged above it, but we're not really strongly breaking out like you might suspect we would. We're just kind of oozing through that. There's support at a double bottom in May at 40.60, and then some other support levels below that. If we were to break 40.60, though, I'd say that'd be pretty bad. So currently, the trend is still upwards. If you look at the 20-day moving average or the 200-day, pretty much any of the Bollinger Band kind of indicators, the trend is still upwards on the S&P, so that's bullish. It is struggling, though, with this resistance at 42.38. Currently, we're back below it again today, but that's okay. It can do that, but if it were to fall back below the lows of late May, 41.90, then I'd have to say that with this recent action we had would be a false breakout. By the way, the 50-day moving average of the S&P is near 41.90, and there's a lot of institutional sellers who come out of the woodwork when S&P drops below this 50-day moving average. But right now, we're still viewing the chart as positive as long as it stays above that 41.90 level. Now, we also take a look at what we call modified Bollinger Bands. When John Bollinger invented Bollinger Bands, he needed to define volatility. And so he used the standard deviation of daily closing prices. And that seems like a fine definition, except that's not the one the math guys use. So we do a lot with modeling, of course, with options. And the Black-Scholes model has embedded in it a volatility calculation. And the implied volatilities that the model gives out are also in line with that. And in that aspect, it uses the definition of volatility as the standard deviation of daily percentage price changes. So it's a slightly different number. That's what we use to draw our Bollinger Bands, hence they're modified Bollinger Bands. We look for signals to occur when we move outside or of the plus and minus 4 standard deviation bands. And there's been some great trades in this from this signal in the past, but there were a lot of false signals as well. So we put some extra criteria on it in the last couple of years or so. So here's the current chart with the modified Bollinger Bands drawn around it. So like this band right there, that's plus 4 standard deviations. And then the one just inside is plus 3 standard deviations. So you get a signal when you move outside the plus 4 standard deviation and then back inside the plus 3, that's a sell signal. And your target is the lower band here. So most recently we went above here we went below, and then I said we need this confirmation. So we did get a little confirmation. The market's been just going sideways since then. So I have this one marked in green. It's really the only sell signal we actually have currently, but it's still in effect. So we're watching that. It will, of course, terminate when the moves outside of the Bollinger Bands. And you can see the bands here starting to contract. The upper ones are coming in, the bottom ones are going up. What's causing that is we've had a massive decrease in realized volatility in the stock market because we've really gone nowhere since really like the middle of May, or at least, 2/3 of the way through May. So that has caused realized volatility to decrease, and that makes the bands draw in towards the center more. In any case, this McMillan volatility band indicator is useful on a number of things, not just the S&P chart. And we do offer it as a subscription service in connection with a TradingView.com account. So if you have the TradingView account, which is free, you can add this on, and you'll get charts that look like this. This is not the current chart, but when there's a buy signal, you get a green arrow. When there's a sell signal, you get a red arrow. And you can do this for anything. You can even do it on 5-minute charts on the E-minis if you feel like it. All right, let's move on to the next indicator, which is put-call ratio. So the put-call ratio as an indicator was invented by Marty Zweig back in the 1950s when he was getting the volume of options, puts and calls, out of the broker-dealer ads that ran in Barron's every Sunday. Today, we have millions of options that trade every day, so we have a lot bigger problem, but we use the equity-only put-call ratio, which is all stock options that trade, as our signal for the broad market. Now, what Marty noticed was it was a contrary indicator. If there was a lot of calls trading, pretty soon the market went down. And if there were a lot of puts trading, pretty soon the market went up. So too much put buying is bullish for the market. Quantifying what too much means is something we have to do, of course. And too much call buying is bearish for the market. So let's just review quickly how it might look. Let's say we take IBM. At the end of every day, we sum up the volume of all the puts that are traded in IBM, and separately we sum up the volume of the calls, divide the two, and that's the put-call ratio. Now the ratio moves opposite to the stock price. You can see that since puts are in the numerator of that fraction, the increase in put buying is going to make the ratio go higher. But when are you likely to have an increase in put buying? Well, that's when the stock is going down, right? So they move opposite to each other. Similar with the calls. Calls are in the denominator, so an increase in call buying will make the ratio go lower as the denominator grows. But when are you likely to have an increase in call buying? Well, that's when the stock is going up. So we keep a moving average 21 days. I would suggest something in that neighborhood, and not something too short, because if you get it too short, you'll just get too many kind of whipsaw signals. But ideally, when you look at a put-call ratio chart overlaid with the stock price, it should look like this. We publish about 1,600 put-call ratio charts on our website every day in an area called the Strategy Zone. I invite you to visit our website, take a look at that. There's a free trial there involved. But here's how it, in theory, would work. If the stock is dropping, as the stock is dropping, people are buying puts. So they're, the public is right on the way in the middle of a trend. But then you eventually get to the top of the trend, and the put buying peters out, and you get a local maximum on the put-call ratio chart. That's a buy signal for the stock. And then the stock starts to move down. I'm sorry, the stock starts to move up, the put-call ratio starts to move down, and people are buying calls. And eventually you come to a local minimum, and a local minimum on the put-call ratio chart is a sell signal for the stock. So let's see how it looks. This is not the current chart, but it does show on top the S&P 500, in other words, the broad market. And on the bottom is the equity-only put-call ratio. And you can see the inverse symmetry that exists most of the time. which is why we use this put-call ratio to predict the broad stock market. So here's the current chart of that ratio, and you can see the local maximums, the local minimums. Most recently, the most recent signal we had here was a local maximum right around the beginning of June, so that's a buy signal, and that gave us the buy signal that is currently in place. Obviously, it's nowhere near the height. Back in March 2020, we had an extremely high buy signal back in this area. So the relative strength of the buy signals is somewhat related to where they come on the charts. This will be a buy signal until it eventually rolls back over to a sell signal somewhere down the road. By the way, last February, and then even a couple of times prior to that, we got some very low readings, the lowest readings we'd seen in 20 years or so, 20 some years. And that's unusual, but it reflects how much call buying has been going on in this market with the the Reddit call buyers, the Robinhood crowd, et cetera, et cetera. So this whole area here is, you might even say, the market's been overbought for this entire time because the put-call ratio has been so low from the heavy call buying that's been going on. But you have to adjust to it because they've been successful. And, you can't just say, well, there's a lot of call buying, so I'm going to short the market. It doesn't work that way. You can get yourself in a lot of trouble. Then as computers came along, we were able to calculate a more pertinent put-call ratio. In other words, one based on dollars being spent on puts versus dollars being spent on calls. So what we do at the end of the day, let's again say it's IBM, we take each option and multiply it its closing price and multiply it by the volume that traded in that option that day, and that gives us a dollar volume for that option. Now you could do it tick by tick. That's an expensive data set, and we found that this is just as accurate. So at the end of the day, we sum up those dollar volumes for all the puts, separately sum them up for all the calls, divide the two, and that's the weighted or dollar weighted put call ratio. And now we're measuring the dollars being spent on bullish opinion versus bearish opinion. It turns out the signals occur more or less at the same time, but they're more extreme. For example, you can see that here, this was the most extreme sell signal was back in September. And this one also gave us a buy signal in late May, which we're operating on right now. And that will be in effect as long as the ratio continues to drop until it makes the next local minimum. So the put call ratios historically have been very strong. We have an excellent track record of these going back for a number of years. As I said, this heavy call buying has been going on really almost since the bottom in March of 2020, certainly since the first stimulus checks came out anyways, has kept the indicators somewhat overbought for months on end. But we do have these new buy signals that were registered, they're not that new now, but at the end of May, and they're in effect right now. What do we buy when we have these broad market signals? Well, in any case, whenever I'm trading options based off a system trade or whatever, where I'm predicting where the underlying is going to go, then I want to have an option with a fairly high delta because I want the option to behave like the stock. If I'm right in my prediction of where the underlying is going, whether it be SPX or IBM or whatever, I don't want to have an option that loses money even though I was right on the underlying. And so we try to buy fairly high delta options because those are the ones that are going to behave like the stock does. On the other hand, if you buy a low delta option, that's a very speculative thing. You're buying out of the money options in that case. So typically, we'll buy an in the money option with a delta of somewhere between 70 and 55, which is an at the money option, has a delta, a call has a delta of 55. So we're trying to balance the risk limiting nature of owning a call option with the ability to have some response from the option itself. Now, when do we spread? Well, on TV, all these option traders spread all the time, which is ridiculous. No speculative option trader really trades like that. I don't know why they're so hung up on that, they'll say things like, oh, well, you're risking less money. You're still risking 100% whether you buy a call or you buy a call bull spread. You're risking 100%. If you're worried about the actual dollars, then change your quantities, but you're risking 100%. So the spread thing to say you're risking less is not a valid argument. When you can use the spread is when volatility is very high. When volatility is high, there's actual statistical proof that the spread may be better than the outright purchase of an at-the-money option. However, even like say last year in March of 2020, the market fell so fast that any put spread you had on was overrun. When you have a spread on and the market goes through your short strike, whether it's a call bull spread or the short strike is above the market, or a put bear spread where the short strike is below the market. If the market goes through your strike, then your spread is limiting your profit potential. So there's a couple of ways you can try to lessen the limitations, and that is to spread out your strikes somewhat. So for example, if we're trading calls and SPY, we might spread our strikes out by 13 to 15 points. But if we're trading puts, we put 25 to 30 between the SPYs strikes, because puts are skewed, and I'm not going to get into what that means right now. Also, if the market hits your short strike, then take the profit you've already earned on your spread, and if you want, set up a new spread, but roll the whole thing up. It turns out that volatility has come down recently, as I pointed out, and VIX has come down quite a bit. Today it's around 18, recently it was around 16. So we're not spreading right now with VIX at that level. It's just not worth it to cut off the profit potential on any position that you might have in place. So let me show you some interesting individual put call charts, because they have a lot of worth as well. Now we treat these just a little bit differently. We don't take every little local maximum and local minimum that occurs. Like there's a local maximum, which theoretically be a buy signal. There's a local minimum, theoretically be a sell signal. With stocks, these occur all over the place. So we just look for the extremes. So this is Abbott Labs. You can see back in November, it had a extreme there. It got a buy signal. It's, worked out okay. Eventually took off at the end. Now we've just had an even higher ratio reading, put call ratio reading, and so we went long. We went long Abbott. So that's one of our recent recommendations. Citrix Systems, same thing. You can see we try to look at situations where this is the highest reading on the chart, which it was at that time, and now this is the highest reading on the chart. This one worked out all right, and now we're taking a new buy signal here in Citrix Systems. Similarly, we sometimes use a little bit of technical analysis on top of the chart. So this is CMS Energy. You can see that, well, here was a very low signal that didn't work out too well. The market more or less went sideways. You really couldn't have made much money buying a put there. But then it came around and gave us another one here. That was better. We had this decline in the market. And then we had a buy signal, which was pretty good. And now we've come most recently to another local minimum, which is a sell signal. But we looked at the chart and we see that first it had resistance here, and then it had support there several times. And so we said, well, we really don't want to buy puts on this thing unless it breaks down through that support level, which happened to be 62. And it did break down through that, actually on earnings, so it kind of cracked down through it like that, and it's kind of been going sideways since. But we are long puts on CMS after it broke that 62 level. Equifax is one that we're looking at currently, and it has managed to stay above that support line right there, which is 228. So this line right there is 228 on the chart. We're holding above that, and so we wouldn't buy puts here, even though there's been a signal. We're not going to buy puts on this sell signal until it breaks 228. And if it doesn't, then fine, it doesn't. Here's one everybody likes to watch, Netflix, and of course you can see, well, what just off the edge of the chart back here was a good buy signal. It's hard to see that one, but there was a buy here. It worked out okay. Here was a buy here. It really didn't work out because it went up for a couple of days and then fell. I believe that was earnings. But now we have another one, and there's been some resistance here at 505. But if we break through the resistance at 505, then we're going to buy calls on Netflix. Finally, this is one we just put out the other day, Whole Logic. We're looking for, it's had a decent track record with recent put-call ratio signals, and we're waiting for it to break out over 64. We can also trade put-call ratios off of futures options. So this is a gold, GC is gold futures options. So the chart down here is made using the futures options that trade on the COMEX, on the ICE, and not GLD options, but the actual gold futures options. However, once you get a signal, for example, there was a buy signal, you can trade the ETF if you want to, and you don't have to trade gold options necessarily. So that worked out pretty well. We rolled up our options once or twice, and then I think we just stopped out of that one the other day. So the next indicator we look at as breadth, that's advances minus declines. Everybody kind of one way or another, technical indicator, technical analysts look at breadth. So the one thing you can do is just keep a cumulative total of the daily differences between advances and declines. Another thing you can do is keep an oscillator. And so our oscillators, we keep 2 of them, and they're calculated this way. We take 90% of yesterday's oscillator value and add 10% of today's difference between advances and declines. So in order to use that at home, for example, you'd have to get this starting value. So I can send you the starting value for the New York Stock Exchange indicator or oscillator, because you'll see New York Stock Exchange advances and declines every day when you're looking online or reading the paper or whatever you're doing. However, there's quite a few things that trade on the New York Stock Exchange that are not stocks. So we wanted a pure stocks only data set, and we found one pretty easily in all stocks that have listed options on them. There's about 6,000 of those now. So we calculate two data sets here, and here's the graph of the oscillator using the stocks only data set. Now, this goes back and starts on this chart of about 2013. So really since 2013, the market has not sold off that many times. When it has, we get these probes down into the green oversold area. And this is 2018 December, as I talked to you, mentioned earlier. And here's March of 2020. But again, oversold does not mean buy. So we don't really buy until it stops being oversold. And so that might, we might miss the exact bottom, but there's still plenty of room left after that. Then when it gets really rolling to the upside, we get overbought. Now, this was a very powerful overbought condition. And again, overbought does not mean sell. You wait for it to dissipate. So moving into the current situation, we had a little bit of an oversold condition during May. There was enough selling there to generate just a probe below, in our case, we use minus 400 as the oscillator value. So it went just below minus 400 and then popped back above. So that was a buy signal on May 13th. That buy signal is still in effect. We moved into overbought territory and we started to come back down. But if we fall back here, a sell signal would occur. Now I'm looking at the current market right now, and it's pretty negative today, about 1,900 declines, 1,200 advances. Of course, the market's not closed yet, but it's possible this thing will go to a sell signal pretty soon. So right now, though, they're on buy signals, and these are very short. This is our most short-term indicator, so it can flip back and forth, which can be, annoying, or it can be very successful. So we'll take the signals, try to keep the losses short if we get a whipsaw. And this is one of the indicators we follow every day in our daily newsletters. Now, there is such a thing as cumulative breadth. I said you can keep a cumulative running total, and that's we can do that with both of those data sets, New York Stock Exchange data and stocks only data, and we can also do it with volume. Now, I have a big difference with a lot of my fellow technical analysts on this. Though, to me, if the market, let's say we just recently had SPX making new all-time high in three recent days. We also had all of these indicators, these cumulative indicators, making new all-time highs on 9 of the last 13 trading days. So that should be good for the future, right? Well, it means nothing going forward. These are not predictive indicators, and you'll have quite a number of technical analysts who'll say they are, but they're really not. And my point of evidence on that is that on February 18th or 19th of 2020, all the cumulative indicators made new all-time highs. By the next Monday, you were in the beginning of the worst bear market that we've seen in quite a while. So they're not predictive. What they're useful for is to spot a negative divergence, like the S&P goes on to a new high and these stop going up. That is useful, and we did have that for a little while this year between March and April, but then that, that's no longer the case. Anyways, by the way, not every market top has a negative divergence. So sometimes you'll see this too. The market will back off. Somebody that's, to me, interpreting this the wrong way will say, oh, well, don't worry because we just made a new all-time high and there was no negative divergence. Again, I cite 2020 as the example. Not every market top has a negative divergence. And the last area I want to talk about is volatility, mostly with VIX, but also with the VIX derivatives. The trend of VIX is very important. It should be trending opposite to market direction. And also, spike peaks on the VIX chart are buy signals. So we can even get into our overbought, oversold thing here, not so much oversold, but overbought. When VIX gets very low, you'll start to see people, and I mean like say below 14, maybe below 12. You'll start to see people say, oh, we have to short the market now. Well, not really. You don't, again, overbought does not mean sell. You would wait till VIX begins to rise. However, in this market, which is very unusual, we've been making new all-time highs since last summer, and yet VIX has still remained relatively high. Here's a one-year chart of VIX, and those Bs are all the VIX spike peak buy signals. We have a system that we use for trading those that has very well-defined parameters. The red Bs are successful trades. The blue Bs are not. You can see oftentimes an unsuccessful one will quickly be followed by a successful one. And right now we're on one that occurred on May, I believe the last one was like May 19th. It was the 21st. So we're on that buy signal right now, but we have a stop in place. All these systems have stops on them. So, that's bullish and that buy signal existed, although they only last for about a month. So we're already coming up near the end of that signal. The other thing we look at is the trend of VIX. Here's the 200-day moving average. And here's the 20-day moving average. So right now, VIX is below both of those, and it's heading downwards. So VIX trends opposite to the market. So VIX trending down is bullish for stocks. And you can see these other times when VIX begins to trend upwards, problems occur. And if you can't see it on this chart, but if the 20-day crosses above the 200-day and VIX is also above the 200-day, that's really a time to head for the hill. So that the last time that occurred was on like I believe February 21st, 2020, like 1 or 2 days before the crash began. So we don't have that right now. So right now this is a pretty bullish chart in terms of stocks. Now you can see right now you can't see, but I'll tell you, VIX is at 18.63 right now. So it's right there today. It's just edging up above the 20-day moving average, but that's not too big of a problem. If it gets much higher, though, it is going to stop at this buy signal that's in effect. So right now, May 21st, there's sort of look at my next slide. May 21st is when that buy signal occurred, and so that's still in effect, at least right now. And also, the trend is bullish. So VIX is behaving well in terms of stocks, and believe me, it has been really since the middle of March last year. So if it returns to what I call the spiking mode, which sets up those spike peak buy signals, then that would be a problem. And right now, today, I believe any close above 1865 will return it to spiking mode. So let me just check. Yeah, 1865. So right now it's what did I say? 1856. So it's close to stopping out that one buy signal. Oh, there it is. And the other thing I've been mentioning, and some people have cited this maybe a little more than they need to, but VIX has stubbornly been holding at fairly high levels. It hasn't fallen to 14 or 12 or even 10, which it did in the bull markets of, let's say, 2017, 2019, and many others before that. And so it sort of means that big money, and I don't necessarily say that big money is smart money, but big money is who trades SPX options on the CBOE, and that's what the VIX is based on, the value of SPX options. And those are, still put buyers in there, still pretty good put buyers who are worried about the market. Obviously, they're buying for protection. I'm not saying they're predicting the market's going down, but as long as these guys think they need protection and are keeping VIX at this high level, it's just a little bit worrisome for stocks. It's not a real sell signal or anything, but it's just something that you should stay alert. You should be alert all the time anyways. So a related factor here is what the VIX futures VIX can be traded. You can't trade VIX itself. The formula is too complicated, but there are VIX futures and VIX options that trade in the CBOE, and those options are based on the futures. So there's one really simple thing to look at here. It's called what I call the construct, and that encompasses both the premium on the VIX futures and the term structure. So typically, and this is, like I say, the case right now, VIX itself is, let's say, 18, and the front month future is 21. And then the second month is higher, and the third month is higher, and the fourth month is higher. So the term structure of the future slopes upwards, and they're all trading at a premium to VIX. When that's the case, that's bullish. That's the normal case you see with volatility derivatives, and most of the time the market is in a bullish state, and so that's all good. When the opposite happens, though, then we have a problem. So like last year, VIX was near 70, and the front month future was 56, and then below they kept going lower and lower. So the term structure was pointing downwards, and they were all trading at discounts to VIX. That's a very bearish situation. So right now we're in a bullish situation, but if it turns bearish, I'll show you how to look for that. This is last night's close. VIX closed at 1702 last night, and the July futures became the front month futures today. So I'm showing their prices. So last night, that's 2049. So if we take the futures price and subtract off VIX, we get plus 347. So this future is trading at a very large premium to VIX. And you can see that each successive futures contract is trading higher than the one before. Now it gets a little flat, here, but certainly trading steeply upwards through this level. And so the term structure slopes upwards. They're all trading at premiums to VIX. And so that's all bullish for stocks. By the way, these futures, July futures, are based on SPX options that expire a month later. That's how VIX derivatives work. If you don't have access to the futures prices, and CBOE has made it much more difficult to get them without paying for them, there are these volatility indices output by the CBOE constantly, real time, all day long. There's a 9-day VIX, there's a 30-day VIX, which is the regular VIX. There's a 93-day or 3-month, a 6-month, and a 1 year. So this is their closing values last night. And again, you can see each one is more expensive or higher priced than the one before it. So the term structure is sloping upwards here too. Again, bullish. So this whole construct is bullish. And I said, tell you how to see when it changes. Right now, I said July VIX futures are the front month. And the next one, of course, is August. Well, there's one every month. I shouldn't say of course, but there is one every month. And so if we're looking for an indicator here that's going to tell us, when things are changing, it would be if August suddenly becomes the higher price. So right now, this is actual quote at this point in time, 1965 and 2105. So no problem. This is $1.40. But if suddenly August goes above July, that's a severe negative, and you want to take some action right away. Either protect your portfolio or lighten up or whatever, because if that persists, you end up in that inverted bearish term structure. But sometimes this early warning sign really can save your bacon. February of 2019 was one of those. 2018, sorry, was one of those times. All right, so just to summarize, current market outlook is this. We still think the S&P chart is bullish as long as it holds above 4190. I did say that I'm not happy with the sort of meandering breakout that's been going on, and now we're not even holding that level, at least not right now. But close below 4190, I think, is going to draw more sellers out of the woodwork. So I would have to change my opinion on the VIX chart, on the SPX chart, if that happened. The put-call ratios are on buy signals. The breadth oscillators are on buy signals, but I showed you that even almost today, they could revert back to sell signals. We'll have to see how we close this afternoon. The VIX spike peak buy signal is in effect, or again, that's in a bit of jeopardy if VIX closes above 1865. But the trend of VIX won't change today, so that's still bullish. And the term structure that we just talked about, that's bullish. So overall, this is a bullish set of signals, but only as long as SPX confirms. It's my experience, long-term experience, that if your indicators are saying one thing and the SPX is going the other way, SPX is right and your indicators need to catch up. So if SPX falls below 4190, no matter how my indicators look, I'm taking defensive action at that point. I just wanted to throw in one little thing here. I think we have just a couple of minutes. Everybody's always looking for a safe bearish strategy in a bull market, and usually you just end up buying puts out of the money and losing a lot of money. Here's one strategy you might want to think about. It has large potential downside gains, but the market has to really collapse in order to realize that. It has no real upside losses, and it has a small loss if the market goes down by a small amount. It's what we call a back spread. We are putting these on this week, and you would put them on 2 months out. So we would buy 2 SPY August 385 puts, let's say, deep out of the money, and sell 1 SPY August 410 put. And you do the trade for even money. So that means that this option might be selling for, say, 6, and this option is selling for 3. You're buying 2, selling 1. We're going to take it off, though, at July expiration. We're not going to stick around for June. So if the market drops by a lot, we're long that 1 extra put, so we can make a lot of money on the downside. If the market goes straight up, we have no debit in this position, so we don't lose any money. Where we do lose money is if it comes near our lower strike, but it's a limited loss as long as you get out of July expiration. So July expiration, then you would take this spread off and put on another one for September, et cetera, et cetera. So there's just kind of a neat little strategy that doesn't tie up a lot of money. You do have to put up collateral in the matter of the difference in the strikes, which is 25 points. But your risk is not really 25 points as long as you get out at July expiration. So I mentioned before that our offer that we're giving today is option. You can be found at optionstrategist.com/TE2021, and it is 50% off our new 14 webinar home study course. Those webinars are an hour plus in length. They're divided into categories, so there's like 4 beginner, 5 intermediate, 5 advanced, something like that. We also just fully published our track record for our Option Strategist newsletter, which is in its 30th year of publication. Last year we had our most profitable year ever. We have strategies that are designed to do well in volatile markets. So we had these returns. The full track record is available on our website. And remember this, past performance is no guarantee of future results. We also have the Daily Strategist newsletter, daily volume alerts, speculative newsletters. We have a YouTube channel. I invite you to be a subscriber, record the market comment every Monday. And then we have 2 even newer newsletters, and this one's pretty interesting. It's off to a very hot start with special situation alerts. But the offer that we're making today for you is an educational one at this link on, you get 50% off on our new 14 webinar complete option series.
Put that up in the chat too.
Okay, great. If you're interested in our money management, that's the link to our URL for that. So we're, I think, pretty much right on time.
I do have a question for you though, and we did run about 3 minutes over into your time. So let me just grab this question. It's from Noel. Can you explain more on the subscription service for the PC ratio service you offer? It's actually 3 or 4 questions right here. Do you do it on SPY or on specific stocks? How often are the signals sent? How much does it cost? Is there a trial service? Thanks. And if that's too much for a couple of minutes, maybe Noel needs to get in touch with you.
Yeah, you can send us an email, but there are trials for everything. For our high-end services, which is the option strategist or the daily strategist, the daily volume alert. So if there's daily in the title, obviously they're coming out once or twice a day. Those are more expensive. The option strategist, the 30-year publication, comes out once a week, and that's less expensive. But they all have put-call ratio-based signals in them.
And they all have a trial, so he can check it out.
Right.
Awesome. Thank you. This has been fantastic. I appreciate you being here with us. And let me just do this, give everybody another shot. You've got to go to optionstrategist.com/TE2021. Am I right? And then there's also a coupon code to use. Anywhere else? Is that right, Lawrence?
Well, the coupon code you shouldn't have to apply it. It should automatically be applied if you go to that website, but just in case, I give it to you.
Okay.
You shouldn't have to have it. If you go through that portal, you should be good.
All right. All right. Fantastic.
All right. Thanks for having me.
Let's see. Thank you for being here. That was Lawrence G. McMillan of McMillan Analysis Corporation. I really appreciate you being here. I hope you have a great day. Next up, folks, and don't forget, if you have to leave, you're gonna get a notification from GoToWebinar of the recording, and you'll also be able to come to tradersexclusive.com to pick up on that. And our next speaker is Alla Peters, and she is of the Fibonacci Trading Institute with how to trade like a hedge fund trader. Let me just see something real quick.
Can you hear me? If you could allow me projection, please.
Yeah, I was just going to introduce you. So Alla is the founder of Fibonacci Trading Institute, Fibonacci Trading YouTube channel, proprietary Alpha Fibonacci system, and Fib Institute podcast channel. Since 2011, Alla has mentored traders from beginning to hedge fund trader in US and globally how to trade futures, stocks, Forex, options, commodities, and Bitcoin with institutional Alpha Fibonacci system. Alla continues developing proprietary strategies, presents at hedge fund events, and teaches globally in live online group and private mentoring classes at fibinstitute.com. And I want to say welcome. Thank you for joining us. I'm making you the presenter now. And here we go.
Thank you. How amazing to be here. Hello, everyone. Hello, traders. Hello, Sherry. My joy and pleasure being here. I hope everyone is doing fabulous, and I'm very, very excited to be here with you. Let's start the webinar, shall we? Hello, traders. This is Alla Peters. of Fibonacci Trading Institute. In this webinar, I will be teaching you how to trade like a hedge fund trader with Alpha Fibonacci system. This is what I teach daily for the last 10 years. But first, I would like to remind you that Fibonacci Trading Institute, myself, or my incredible team, which mostly consists of the graduates of the course, are not financial advisors and not registered with any of the government authorities. Everything you learn here is to empower you, educate you, how to trade proprietary system consistently. All software demonstrated as is, no warranty of any kind is given. I hope you understand that trading any instrument involves risks, and all the testimonials you will see from traders had never, ever been paid for and do not guarantee anyone else's results. In this webinar, we will cover how hedge fund traders think, prepare, and trade with Alpha Fibonacci system. How traders trade futures, stock, commodities, cryptocurrencies, and Forex globally with proprietary system, and most importantly, how you can trade like a hedge fund trader. Because this is a crucial and critical difference. You absolutely must understand that in order to trade as a hedge fund trader, you need to stop thinking and trading as majority does. Because I teach you how to trade, think, and live as top 1% does. So briefly about myself, I developed proprietary system in 2008, system traded globally. I'm mentoring and coaching traders, JP Morgan, Wall Street, institutional traders. I mentor children of my students how to trade. Last night, I mentored 11-year-old Emma, who is daughter of my long-term student, Michael. I present at hedge fund events, but most importantly, I live and breathe what I do, and I teach daily how to trade successfully on all instruments at any time you choose. This is community of our global traders. Emmanuel with his beautiful wife, trading, as you will see next, NASDAQ. Richard killing it on S&P, quadrupled his retirement account. Carol trading oil, Sam trading options. Survived war in Syria and put his daughter through Harvard, trading Alpha Fibonacci system. This is me meeting with Jason last month in California. This is us in Switzerland meeting Victor. He's a hedge fund trader who is trading Forex. Here's me meeting with William 4 or 5 years ago. I'm meeting with William again next month. And this shows you the power of our global community, because every single one of these traders done chasing indicators, done chasing cheap systems. This is the only way to trade as top 1% does. So here's system in front of you right now on S&P mini future. All of this identified days in advance. If you are witnessing this system in our trading room, you see instantly the power of these levels to the tick. I convert this chart right now in front of you to 1-minute chart. We knew that this is reversal zone. We identified this days in advance. We discuss that this is ultimate place to be post FOMC. And this is exactly where institutions stepping in right now. And here's the system in front of you. Precise entry, precise stop, precise targets. What do you see that playing out in front of you? On top day trading instrument in US. What does the word RZ means? It's a reversal zone. Expect reversal. Intelligent trader exit trade here. There is nothing else is possible, only this. This is a rule-based system. You can apply to any instrument you choose. All of this on S&P right now, when software is showing you clearly This is your entry, this is your stop, this is your target. So if you manage to pull 5 points post FOMC release, on one lot it is $50 per point, $250. On 10 lots it is $2,500. Do the math. If you obey the rules and you choose only quality trades, this is the highest probability. Everything else, pure junk. Nothing good played out. And again, if I take you back on any time frame you choose to trade, such as 15, let's check the system today before, shall we? Here's the system on June 14th. On June 14th, price was at 42.46. Intelligent trader was only interested in reversal zone. Intelligent trader who understands that institutions keep buying everything and knows the power of these levels, only in front of the screen today post FOMC. So when price skyrocketing on June 14th, when price skyrocketing on June 11th, when price skyrocketing on June 10th, you should not be surprised, because every single day, intelligent trader riding Goldman train. This is the power. This is vertical bullish rally during the worst economic crisis. So if you're obeying the rules and you understand the power of these levels, you know hours, days, weeks, months, and years in advance when to trade. And most importantly, you stop losing money, you stop wasting your time. You are not staring at the market here. Do you remember this morning? This lasted 16 hours. This is where broker printing money. This is broker's heaven, software keeping you out of trouble. But if you are not on NinjaTrader 8, you absolutely learn the rules. Not just precise entry, stop, and targets, not just when to buy and sell, but most importantly, when stop losing money, stop wasting time, stop losing your mind. This is a crucial, critical part. Markets are not about buys and sells. This is what majority missing. Market is about preserving your capital. And that's how hedge fund traders think. So if I take you back to this chart and I go back to all the way to June 1st, I'm leaving my pointers on. What do you see that plays out? Tell me, do you see where reversal zone is? It's a crucial entry. It's a crucial buy point. That's it. You are not shorting near. You understand the power of the system. And you understand all of this hours, days, weeks, months, and years in advance. And this is a stunning reminder of what just played out. Ultimate precision of Alpha Fibonacci software live. You choose what instrument, you choose what time frame you want to trade. And if I take you back to right now, again and again and again, this is the market. You are never, ever, ever touching this. You understand that this was a crucial reminder of very weak buyers. That's it. Nothing less, nothing more. Ultimate precision live on S&P mini futures on multiple charts. but identical precision present on any instrument you choose to trade. This is strategic, precise, institutional trend system that removes speculation and allows trader to trade markets as strategic alpha Fibonacci chess. So here's my typical morning with my students all over the world. Theo in Australia, King in Utah, Sue in Dallas, Ramiro in Colombia, South America, Manu in London. Every single one of these traders, different experience, different background. William in New Jersey. As Theo says, those institutional levels are so potent that clearly present the most objective roadmap. And most importantly, when not to enter a position. I cannot emphasize this enough. You stop being anxious. You stop being depressed. You stop the panic and negativity. Alpha Fibonacci system shows you when not to trade. So every single one of these traders trading pound dollar, S&P, NASDAQ, S&P, options, every single trader completely different. As Denzel shares, I'm consistently profitable for the last 5 weeks. King is killing it on Forex. Every single day, more and more emails, but this is from our trading room. So when you come to fibinstitute.com, you can request an invitation to our trading room where you see the system live. So please take advantage of that. This is where you get to see so much and meet the students from all over the world. This is a perfect example of what you just witnessed live. This is how pure the system is. There is no indicators, only pure price, precise entry, precise stop, precise target. Here's your stop, here's your entry, here's your targets. And what does the price says? RZ, reversal zone. This is day trading strategy with ultimate precision. But in addition, you can trade long term, which traders do all over the world. But JP Morgan traders do not day trade. They use Alpha Fibonacci system long term. So when I bring to your attention what played out during crisis on S&P and what to expect next, here's Alpha Fibonacci system during crisis since December 2019. Multi-million and billion-dollar position takes days and weeks to enter. When S&P reaches reversal zone, intelligent trader knows far in advance where markets would crash from. So when market in free fall, there is no surprise. You know many months in advance where institutions would buy from. So when price reaches institutional bottom and you're trading your little account, you're trading with institutions. You are very well prepared. This is what Alpha Fibonacci system looked like during crisis in March 2020, where institutions were taking positions. There was no good news. World in free fall, US on lockdown, but prices skyrocketing. So many trades every single day. On NASDAQ hundreds, on Dow 30, 40, 50, on S&P price skyrocketing, endless trades. When institutions take positions, you are enjoying the markets. We are no longer at 2200. We are at 4200. This requires your ultimate knowledge of price action. This is the train you ride with your little or large account. So prior to placing a trade, you absolutely must understand what institutions do, and you trade with them, never ever against them. And we will review all the events that playing out on S&P before we close out the webinar. Because when you trade indicator-free system, you decide what you want to trade on any instrument. So system consists only of two components, indicator-free price and proprietary alpha Fibonacci retracements. So let's take a look on Apple with alpha Fibonacci system for the last 6 years. Shall we? Bold pink line identifies critical, crucial support on Apple. Apple comes out with the worst earnings in 13 years. I present at the biggest hedge fund convention, and what do I say? If this support will hold, Apple will skyrocket. This is also I posted on LinkedIn YouTube channel and discussed with my students. Apple skyrocketed, doubled in value, despite worst earnings in 13 years. You also know many months in advance where next level will be. You also know many months in advance where reversal zone will be. So when Apple in free fall, despite excellent earnings, you should not be surprised and you're looking to buy at the bottom at 140 level. And that's alpha Fibonacci system on Apple. Shall we take a look on Apple right now? Here's Apple 2020. So when Apple sold out this year, you should not be surprised. This is bullish trend exhaustion levels. This is your trading range on Apple. This is your institutional trading range. 124 is lifeline on Apple. It's a critical, crucial support. Apple can be stuck in this trading range for many months to come. And that's precision of the system on Apple for the last 6 years. One moment, please. So journeys and stories of our students is the reason I live and breathe what I do. You can listen to our podcast channel as you can see the links in front of you, and I will walk you through the website at the end of the webinar. So when Richard came to me, he's been struggling for many, many years, and he took the course very, very seriously. He signed up right after webinar. He doubled his demo and started trading live November 9, 2020. So as of December 7th, trading live, his funds were 3,600. As of January 2021, months and a half later, his account 11,500. And then he shares that was his best week, which is 4 times more than what he was making while working as a therapist. In April, Richard's account 37,000. And he's working only mornings. And when he meets his goal, he's walking away for the day. So I highly encourage you, when you come to the website, this is where you can find Richard's story. This is where you can see podcasts of many other traders. Also, here is our podcast channel. You will always find trader just like you. But your success starts with thinking and trading as hedge fund trader does, which is exactly what Richard has done. So a system, you can trade any instrument from 1, 5, 15 on futures, Bitcoin, Euro, Pound, anything you choose. As a matter of fact, let's take a look on Bitcoin and what played out since 2021. And the email I just received from trader who is trading Bitcoin. Here's a system in front of you. Bitcoin rallying 2021. Many months in advance, you know where Bitcoin would collapse from. Reversal zone identified months in advance. So when price reaches reversal zone and price is stuck, you are not surprised. You understand that this is crucial, critical level to the downside. Do you remember what played out on Apple? So when Bitcoin in free fall, 50%, no one should be surprised, correct? So when I received this email last week from Steve, who left emergency room medical practice and now trading Bitcoin, you can become another Steve. Moved fully out of Bitcoin in 40-50K range on the way up, thanks in large part to your incredible wisdom and influence. And if I take you to the journey of other traders, every single trader trading Bitcoin in so many different ways. You can also trade 1 minute, 5 minutes. Of course you can. And that's what traders share every single day. And when Andy comes to the course, Andy is a hedge fund manager in London, and introduces his son to the course, his son Dominic, 14 years old, it's one of the biggest events, as you can hear on our podcast channel. This is Andy trading long term. This is his son, Dominic. This is the story and journey you can listen on podcast channel. So if Dominic can day trade Alpha Fibonacci system and his father uses system long term, here's a system live in front of you. Here's a scanner. This is what these traders do for day trading every single day. But if you're using options and stocks, this is what you use again and again and again. Do you remember what I promised you? It's a reversal zone. Do not short near. And that's the power of the system, that we will continue looking at this chart as again and again and again I promised you. Obey the rules and the skies are the limit. If you think and trade as hedge fund trader does, this is the best place on S&P this morning, no matter what chart you choose to trade. And that's what every single one of these traders uses. On SPY, Bitcoin, on options, on Forex, on gold. Jennifer prefers Nasdaq and gold. This is a system on gold future. This is day trading gold. But if I take you to long-term Alpha Fibonacci system on gold, here's gold before the crash. Do you remember reversal zone on gold and sell-off? There is no surprise. This is the power of the system that allows you buy the bottom and sell the top. So here is gold right now, skyrocketed from the bottom, selling off right now. There is no surprise. You buy here. And I will remind you by taking you back to December 2020. So you will see how powerful this moment was on gold. Do not overcomplicate trading, pretty please. If you think and trade as intelligent trader does, you're extremely well prepared. This is predictive precision of institutional trends and trading ranges every single day. You come to the chart when ultimate reversal zone is present. It's exact same thing playing out live. S&P already skyrocketed 20 points, and we will continue monitoring this event. So here's gold now. Skyrocketed from reversal zone. Let's take it step by step. Where gold was in March 2021. You are excited, you are thrilled to buy gold at the bottom. You are not shorting near because word reversal zone means highest probability reversal. Here is May 1st. There is no surprise, all precise. So if you understand the power of institutional sell-offs and institutional rallies, you are trading long-term and you day trading short-term, utilizing identical rules. This is gold for the last 2 years, and this is S&P right now. The only difference, you holding this trade seconds and minutes. Gold, reversal zone, or Apple, ultimate top 216, ultimate bottom 140 for weeks, months, and years. Right now is not the place to buy gold. You learned the rules in the course. All you have to do, obey the rules, and the skies are the limit. This will be very powerful level on gold next. Intelligent trader knows this well in advance. And that's ultimate precision every single day. Gerald is my dearest friend for life. He was CME trader for many, many years. And when I speak with Gerald every single time, my heart singing, he's my dearest friend for life. He introduced his brother, hedge fund manager, to the course. And that's a trader who was trading 800 lots on CME floor. But Jennifer has 2 little babies at home. Entirely different trader, completely. Nothing in common with Gerald. Because if Jennifer can do this during the worst economic crisis, imagine what you can do. Her husband, Emmanuel, brought her to the course. And this is the biggest testimonial of the pure, precise institutional system. Because the only thing I teach every single day, how to trade and think as institutional trader does. So here's the power of the system on Amazon for the last 3 years. Amazon reaches mid-trend, and you know many months and years in advance where reversal zone will be. You are not panicking when Amazon in free fall. It was absolutely expected months and years in advance. Amazon crashed and burned more than $700 per share. Do you want to buy on great earnings? Everyone on the planet would be Bill Gates if earnings worked. Everyone on the planet would be Bill Gates if news worked. The only thing that works is pure price and proprietary Fibonacci rules. Amazon sold off from alpha Fibonacci reversal zone for 3 years. 700 crash, 300 crash, more than 600 crash. Here is Amazon right now. The entire year stuck 3000 level is a critical support on Amazon. And that's the power of the system on Amazon for the last 3 years. You will never need anything else to use the system for options for investments long term. So if you know many months in advance where reversal zone is, you are much more relaxed. You are not stressed out. And that's what Alpha Fibonacci system is all about. So when Jeff stops by the trading room, it's a gift. Jeff is a graduate of the course. Jeff, 78 years old, spending only a little time at the end of the week trading long-term stocks. That's it. As Jeff said, I would like to tell you folks, patience, wait for great setup. That's it. And enjoy institutional power. So, thousands and thousands and thousands of traders all over the world, tens and tens of thousands of emails. You will see it all in my book that's coming next year. Next year, I also travel the world meeting with students all over the world, from New York, Florida, Utah, Texas, to London, France, Monte Carlo, Spain, of course, Israel, Africa, Middle East, Saudi Arabia, Dubai. Our students are everywhere. And here's the emails I just received. This never gets old. I worked with Fariboards just right now. Fariboards is in New York. Mustafa in Saudi Arabia. He's quitting his job. Sue, listen to the latest podcast. She's killing it with options and day trading system. Theo is a new legend. He's trading it all. This is what he posted in the room on Forex. And the updates keep coming every single day. This is the reason I love what I do. I mentor you how to think and trade as hedge fund trader does, with preparation and strategizing with institutional power. So would you be much more relaxed if you knew where institutions taking positions? I certainly hope so. Here's oil with alpha Fibonacci system for the last 6 years. When oil selling off in 2015, you are very well prepared and very well excited. You understand where institutions will be taking positions. 30 level is stunning place to buy multiple oil stocks, to use options, to day trade, ultimate institutional bottom. So when oil reaches this level, it's a brick wall. It's the end of the minor trend. But let me remind you, the end of the minor trend played out in the trading room for the previous 20 hours. That shown to us that buyers are weak. This is the system. This is reversal zone. Oil 2016, Amazon, Apple, Bitcoin, S&P Live, 1 minute chart now. Any surprise? Should not be. We knew this many days in advance. And you can view this on our YouTube channel. So when oil skyrockets and doubles in value, what else do you know many months in advance? That oil will crash and burn from reversal zone. And you also know many months in advance that ultimate bottom extremely low. So when oil in free fall, you are very well prepared. You're shorting oil with options and you're exiting your long-term stocks. You are not listening to soap opera on the news. You understand that the only thing that matters is pure price. So when sell-off in progress, the only thing that's left is bold pink line. Free fall on oil continues 2020. This is oil 2020. Contract has changed. What do you see at the bottom? Tell me. It's identical event that playing out in front of you right now. And that's the key. Buying ultimate bottom is what intelligent trader does, knowing months in advance where it will be. And that's exact same thing playing out in front of you on S&P right now. To the tick, where oil skyrocketed from in 2020 is where S&P is skyrocketing from after FOMC. And bullish rally on oil reaches the end of the minor trend in 2020. It's a brick wall, but buyers picking up this steam. So this is a reason I love what I do. I developed over 30 strategies in the last 16 years. It's ultimate precision, ultimate power, no speculation, no indicators. Hedge fund traders, do not chase cheap indicators. Hedge fund traders prepare to enter a trade. That's the only way to trade. As Theo again and again said, trading with those powerful institutional levels is going with the market flow of the smart money. It never ends. Options, stocks, Forex, our community all over the world. So please listen to the podcast. And if you're ready to trade any instrument you choose, if you're ready to join our global community in more than 50 countries, I look forward working with you. Because if Dominic can do this, if anyone can do this, so can you. Every single day trading range will vary. Never ever ever forget that. This morning was extremely challenging trading range prior to FOMC. This is by far is the best. And again, if I bring to your attention the software shown you clearly. Do not enter into this level. While we were in the trading room this morning, we had bold green line near. Software kept you out of trouble because preservation of your capital is the most important part of your trading because that's how hedge fund traders think. But there is nothing in common between trading 4,200 versus trading 2,200. So if you understand this, everything else will be a breeze. Markets are quiet. Miami is New York. 90% of commercial real estate in New York is out. This is a reason institutions holding positions. So if you understand tax structure of hedge fund traders, you understand so much more about events in the current market. This is institutional trading range. This is a chart you start with. And if you know many days in advance your day trading range, your day trading reversal zone, you trade like Dominic, you trade like Richard, You trade like traders all over the world do. And if you're interested in Forex, of course you can. Both McMillan holding the key, pound respecting this level for 8 years. Has anyone heard good news in UK? You know, many years in advance, many months in advance, where pound would skyrocket from. Look at this chart, 1100. Pound country on lockdown, but pound skyrocketing. But it's exact same thing that played out in front of you on S&P in the live markets right now. The only difference, risk management and trade hold time. That's it. You can trade it all with Alpha Fibonacci system. So traders, if you would like to join us, please come to the website and review. On homepage, you have the most important information that guides you and takes you through step-by-step description of our global system, proprietary system that can be traded on any instrument, any time frame, any platform. Every trader trades different instrument, different account. Brett went from $10 an hour to 3,500 per day. I spoke with Brad yesterday. Emmanuel, you saw the emails from his wife. Carlton, my dearest friend for live trading for a hedge fund. Ken made movie about his life. Richard, you saw his emails. David, trading it all. Every trader chose a course appropriate for them. It's a lifetime system for any platform or lifetime software for Ninja 8. Private mentoring available as well. All classes are live, video library and modules available to you. As students all over the world enjoying videos and modules 24/7. If you would like to see thousands and thousands of emails I receive, this section constantly updated, and what students share about course and our podcast channel. I just uploaded latest podcast with Sue, who is a phenomenal trader in Dallas. So please listen because I look forward doing the podcast with you. Because if these traders can do it, so can you. I only know how to mentor hedge fund traders. I don't accept and allow anything less. So if you're ready to become top 1%, I look forward working with you. Any questions for me? Do not hesitate to contact me. 925-257-4298 or info@fibinstitute.com. Thank you, traders. Thank you so much. It's been my joy and pleasure.
Thank you, Alla. Thank you. Thank you for joining us today. I appreciate that very much.
Thank you, Sherry. Thank you, traders. Any questions, please reach out. Thank
We
you
do
so
have
much,
questions,
everyone.
but we don't have time for them now. I'm so sorry.
No problem.
I want to thank you. That was Alla Peters with the Fibonacci Trading Institute with How to Trade Like a Hedge Fund Trader. And we have the link to her, podcast, the student podcast. Those are some pretty powerful videos. And we also have, you go right to her website and you can go to contact us to ask those questions that we did not have time to cover today. Our next speaker coming up is Thomas Barmann with NeverLossTrading. It's a division of Nobel Living, LLC. And let's see. Thomas's introduction to trading came when he was just 22. And over the decades, he's acquired a wealth of knowledge how private investors can make money in the financial markets. He developed algorithms and software for high probability trading and investing with specifically defined trade situations, entries, exits, and stops. He trades by taking advantage of spotting and trading along with institutional money moves, minimizing risk and compounding interest. The crowd follows the leaders, and as a private investor, you can do that too. Your edge is that you are faster in and out of investment than institutions can do. A very small group of people keeps the knowledge of how to trade the financial markets, and those who enter unprepared pass their money to those who know. He aims to make the world a better place by sharing knowledge and giving education. To do so, he formed an education company in 2008. The mentorship programs of Nobel Living LLC are taught one-on-one at your best available days and times. He's also the author of 3 published books, Integrated Trading and Investing System, My Stock Market Income, and Your Trading Career as a Private Investor. And he's also authored many other publications. So welcome, Thomas. I appreciate you being here with us. Let me just make you the presenter very quickly.
Thank you very much for the introduction, Sherry. I'm looking forward to the event. Thank you for having me. I see, and I say show my screen, and you should see my charts now coming up. Yeah, I see that, and I want to make it exciting for everybody here who came to learn. That's important because, you know, if trading was easy, nobody would ever go to work. The good thing is it's learnable. And I want to share with you the way we do it. And the title today is not a play on words, timeless swing and day trading. The timeless component is usually we look at time for the development of a price move, and I'll take with the systems that I propose to you today, time out of the cohesion. Before we go there, there's my legal disclaimer. There's a risk in trading that you should consider. I'm here as a trader and educator, not as a broker, dealer, or financial advisor. The word never loss trading derives from never stop loss trading. We do concepts of repairing trade instead of doing a stop. So the idea is you never lose a trade with never loss trading. That's not what we want to propose, but we help you to come to the world of high probability trading with our algorithms. And I'll show you plenty of examples today here while we are together. Yeah, so I want to simplify your trading because, as I said, it's not that easy. There's 5 dimensions to cover, and I'll go through with you. But first of all, we need to select well tradable assets. Yeah, those are out of the arena of stocks, options, futures, and forex. Not all of them are well tradable. And I have to tell you a story and give you the ability to make your money with the in and with the out. Yeah, we want to act at key price turning points, and that's what the algorithms help us to do, to separate signal from noise. We talk about high probability trading at or above 65% attainment rate to predict the move from A to B. We be less predictable by eliminating time. That's a big achievement that we made within our research and efforts, and I'll show you how that's going to work. And all decision-making criteria are on the chart, so let the chart tell when to buy or sell. And I show you also today a little bit of the world of leverage trading so that you can make higher returns as a private investor, and that should make it exciting. So now I start and give you a first little glimpse of something you might never trade, but it'll tell a story, and that's what the chart shall do. So you see here the random length lumber future on the weekly never loss trading top line chart. And you see how our charts work. It says here buy 796 if the next candle ticks it out. Indeed it did. And then you can rise it up. How far can you rise it up? We give a first indication here, but also you have that red line helping you if you want to scale it out. But we also know 2 of those dots on top. There's about the first part where we'll look of how it continues, and we need another strong signal in an up environment. We don't take the first short, very simple rule here. And the next long came here by 1143. And so we were able to scale that up. And here you see some of those candles have a cyan dot in. We call them a light tower. When they have a signal, it's a power tower. And they tell a story, a trend that starts in a light tower. Go with me to the left, likes to end in a light tower. Here we go. We started in a light tower, we are rising up, and we end in a light tower. Simple rule, light tower on a high, not a good place to buy. So what does it mean? You better sell. Yeah. Okay, simple rule. Had you sold on the slide tower on a high because we got there, then you see random lengths lumber made a big dive. Wow, it fell apart. But what is it also telling you? Pre-indication that we're gonna have a little bit of an issue in our real estate sector. Yeah, today building permits didn't come up at the rate of expectation, and there's more behind it because that's where most of the lumber is used. So the system tells a story of what you need to do in other areas too. But important is, if you had traded this, just sold one contract, one tick is 0.1 here, the tick value is 11, so that means 7,010 ticks was the dive, would have made you $77,000 on a $9,900 margin, or 779% return in a matter of a very short period of time of 2 weeks. Yeah, so that's surely a super duper achievement here right on the chart. But what I'm telling you is, let the chart tell when to buy or sell and follow through. And that's what top line here does for you. I show you different examples because it's a time-based chart. It's weekly, the time is on. So our systems work time-based and timeless. Yeah, and we follow institutional money moves. We let our indicator scanners look at lower level developments. Yeah, so this morning you see here June 15th. So this morning we published, and you can follow us. It's for free here on Instagram. Yeah, NeverLossTrading. There we saw real estate is on the brink. Yeah, this morning the news came out. Yeah, it's not doing too well on the rate of expectation. And so is energy, even so crude oil is holding up still. So were stocks out of China, and semiconductors wasn't also too exciting, because this is where institutions were scaling out, and our indicators tell that in advance. And we post this every day to our clientele, but also we'll do through that channel to the people who follow us on Instagram. You have an idea of what's going on with institutional moves and the overall market. But let's go back and look at the choices that you have as a trader. Yeah, if you trade stocks, options, futures, or forex, I put together a little margin matrix, and we talk about what is the ROI, return on investment expectation, what's the challenge. And we are not saying what you're supposed to trade. We trade all of those instruments, but they are different in their choice. There's 2,500 well-tradable stocks. We talk about volume and gaps and bid-ask spread. In that sense, 250 stock options, 20 futures, and they are not all day tradable. I like to have only 3 for the day trades, but there's about 20 for good swing trades, and those are super duper instruments, and about 8 forex contracts. The others have sometimes a very thin volume and exchange and a high bid-ask spread. And so with that, these are the rate of expectations: ROI, return on investment, stocks between 2 and 4% on a day or swing trade, options around 50, futures 15 to 90, and so is forex. So some look exciting, but also we can help you to beef up stocks to come to the 50% range. What you need to have is portfolio margin that's obtainable if you are holding more than $125,000 in your account. Need to pass a test where we help, and then you can only trade for the accountable risk and leverage your return on risk. These are little insights that I want to give you here. And the key challenges are 85% of the stocks that move with the overall market. You need to have a good scanner, a good concept, a good idea to find those with exceptional moves, because else you can also just trade the SPY or a derivative of it, the S&P 500, to go through. On the options, you need to be more careful. The return is attractive, but on the other hand, you need to be right on time and direction. For both, if you are selling options or if you are buying them or you do like spreads, it doesn't matter. Options have to be right to make your full return in direction and time. And so that's a very, very essential thing here to cover. Futures, do the leverage right. Many new traders, they trade for very, very little increments. Here's a key hint: trade for at minimum a $200 move, because else you be too much in the arena of volatility and you're not going to have fun. Yeah, and here on Forex, central banks sometimes interfere and they throw things around. You have to be protected at such points, because then you can have a wild move against you and your stop might be filled at a very different price point. All of that can be learned, but you need to find somebody, and that's what we are here for, to help you learning that. And regardless of what you want to focus on, being stocks, options, futures, or Forex, we tailor our programs to you, yeah, because we have the indicators, but we tailor the program to what you want to reach. We teach individually at your best available days and times. We show you also how to produce multiple streams of income. That's very essential, so that you're not only having one stream of income, and therefore we might put together a couple of those instruments if needed, but that'll help a great deal. Then risk control, that's the most important. We make an assumption of the outcome of a trade, but we control the risk. So therefore we need to find a good risk control of what you do, not to have drawdowns. And we work with all account types. Yeah, there's people who work that come with a 401k. There is usually 4 times more holdings than in a trading account. So therefore learn how to trade it. And our system gives you wonderful clients and insights of how to do that. Yeah, the challenge for you as a trader is in multiple dimensions. And here again, the top line chart here, the ES weekly, you see ambiguity is when have a purple zone. We have uprising momentum in blue, down in red. If red and blue mix, it's purple, so there is no real direction. When the direction is mapped out, we'll get an indication by the system long, and we reached our goal, and this is where the market is right now. But here you'll see that red line would have been your stop line for going up, and that gives you a good idea where things are. And here in the zones, we have an outlook. We might go to 4,600 before we pull back, but whatever happens in the market, the indicators will give you a good indication and direction. And that's what we talk about price movers, entry, exit, and stop, limiting risk, and considering time. Well, here today, I'll show you how we take time out of the cohesion so that you can make less mistakes as a trader. Because here in 5 dimensions, if you have the wrong stop, you are out and the trade commences in your direction. If you don't consider the time right and you have an option, you run out of speed. Risk reward is wrong. You make drawdowns if you don't have the right target. The price pulls back before you harvest. If you don't have the right entry, you are not getting in. So all of this I'll take off the chart and put it on one point of high probability trade entry with frequent price changes, meaningful time frames, so that you don't have to act in split seconds. Your starting capital needs to be only $500 to do most of the trades, because today I focus a little more on futures and a bit on stocks. Yeah, and risk limiting. Yep, that's very important. That's very doable on swing and day trading, and tight bid-ask spreads, because you know some instruments have wide ones. They're very bad for a retail trader. Yeah, so the chart shall tell when to buy or sell. I zoom a little in there, and there you see, for example, here on our ES chart, yeah, a day trading example. It's just one afternoon, and you see here floating up by 4,091.80. Next candle takes it out. There's a target on it, and we repeat that signal. And there you see here is that red line. If you wanted to trail a contract up, you can. And when you say, look, the ES, I don't like to trade it. I like to rather trade a smaller scope. Yeah, then you take the micro account. It's 10% of it. It's all tradable with that, because the indications will be along the price move, and the same on the way down. And here we had some ambiguity on the top, but clearly what we state, and I go more in examples where we build them up, clear-cut buy and sell indications, entry tickets where you know you can order a buy stop with an OCO bracket or a sell stop with an OCO bracket, and things are walking your way because you trade at key price turning points with system-defined entries, exits, and stops. Frequent signals. Look at the amount of signals in just one afternoon. I'll show you plenty of more examples. A set risk and reward, because this you cannot do wrong, because it's all on the chart for you. And the rules, they're learnable. They might look complicated at the first sight, but this is when you go into a cockpit of an airplane, there's multiple instruments. If you get familiar with them, they are just talking to you, and this is what the chart will do. Why should it work? Yeah, we are separating signal from noise. We are looking where underlying changes of supply and demand are, and with that we achieve attainment rates of 65% and up, while most of the standard indicators are around the 55% level at best. But why do people use something else? Because it's commonly used and it's free. However, if you think about the math behind it, take 10 trades and the 55% system and the 65% system. For 6 or more winners, the probability on a 55% system is 50.4%, so it's random. If you use a 65% system, for 6 or more winners, you have a 75% chance. This is a mathematical reality you should put in the back of your mind when you decide with what you trade and what you make the basis of your decision making. 76% of the retail traders, unfortunately, are losing money. That's based on brokers' data that I can substantiate. It's not just pulled from the air. It's unfortunate. I want to help you. I want to give you suggestions of how that can be made different for you. Why do people choose low probability? Because most beginning traders don't want to go on a low budget, but they don't consider what they lose to the market. Yeah, they pay $79 for a system and lose 10,000 to the market, and still you don't know what to do better. Yeah, only a couple of instances were validated. I'll show you an example where we went just through 1,000 iterations at ease just for one instrument. Yeah, traders decide not by numbers. Yeah, trades are decided by stock tips, emotions, ideas. That's all not good. After 3 losses, the trader stops and goes to the next system because they're readily available for a low budget. Or you take a gambling approach, putting 50% of the account on one opportunity that needs to work. This is all what I want to get you out of and make you offers to do it different. Yeah, so here we just developed a new indicator, very simple chart. There's not much on. So you see here buy thresholds and sell thresholds. Yeah, so for the system. Yeah, so I'm just testing everything. We tested 1,000 instances, and when you test 1,000 instances, you look at sequences in all of this. So this indicator, it's just coming up and it's going to be available now, had the 75% accuracy. The max losing sequence, and that's important, was 4, because out of 1,000, if you have 100 losing sequence, that's bad. Yeah, or 50 or 20 or so, because then people lose the confidence in the system. But we didn't have it, so that's how we test things through. And the max winning sequence was 14 in a row until a loser came in. So that's very solid. And that's part of what we call the NLT timeless trend catching. Yeah, so this is where we integrate that because our clients asked, and we also wanted to produce that in our research, an early entry into an opportunity where we can double up on top when we go for the target. Yeah, so it's on the trend catching system and it's all in one package what I'm going to offer to you today. And this is how it looks. That's a ES day trading chart. So sell T, that's the new indicator, gives you 42.3750. There we sold. We got a confirmation signal of the trend catcher in advance. And so then what did we do? We moved our target with it and we made the extra money, early in extra income. That's what we were striving for. And the same on the way up, come with me here. So you got the early T signal here up by 42.3280. It ticked out in the next candle. We made the extra income by moving up our goal. And this is how we work. We work at key price turning points. I didn't mention this one yet, okay, because we were in the trade. So therefore we just take the signal and we could also double up on this, moving it to the next point of attainment. And you saw when we came to this, then the price turned. So I show you also a swing trading example, yeah? So that's a swing trading example for the ES. Here we trade for a bigger amount of money. That's the full contract, and I always base everything with money based on one contract because then it's easy calculatable. Yeah, so there you had your first signal. It's a floating signal. That's something special also for the timeless trading. It floated out of that. Why is it timeless? The candles are not made by time. They are made by price move only. Yeah, that's something we developed. Yeah? And so therefore you knew, okay, here was my target, and did we reach that? Yeah, we got there. We got another signal confirming, so we could add to it. And then it was about time to get out. And so that first gain, one contract here, following that would have been a $4,000 gain. We started at 510 and we ended the chart here today at 616. So the next gain came on that reversal. Yeah, buy T early in, doubling up here, so getting the extra money. We made $2,500 on the upside. But look, we not always win trading. Yeah, we'll have an opportunity here also to lose money because that trade got stopped here. So there on the red line was the stop line. We got stopped and we lost $2,500. But then right again came our next win and another win on top of it, which I didn't even put on the chart. And so therefore, just added up, this is about give or take $10,000 in a matter of 1 month trading one contract. If you want to trade smaller because you're not sure if that is, take the micro contract and then it's half. And when you're certain that the system is giving you what you want, you scale up. But first learn what that all is on the chart, how you can follow the system and how you can produce income along with the price move, taking time totally out of the equation. Yeah, so here I did the same for Tesla, very recent into today. So you saw Tesla here, short opportunity, and that's a winner. Another short opportunity, there was the stop. And one thing is we don't count time, but we count bars. By 5 bars, you should be home. So either you should be at the decision-making point that you got where you wanted to be, or you get out. Here we pound a little on. Yeah, so we got our winner. Then the next one comes again and comes home. So how did we do that? Look, here is the entry. There was the goal, a little lower than it was, but this candle then reversed it, pulled the goal up. So therefore we had to come up a little higher. Yeah, so that's where we needed to go. And there right came the trade. And we banked it. And there was another one we banked and there was a loss because that happens, but just count it up. 4 winners in a row, 1 loser, clear relation between win and loss, and the system is producing for you, and you're different because time-based, everybody knows where the stops are. You trade price-based pure, so you are different, and not 10,000 people are using that, making the decisions. You will be in a unique group of people making good and sound decision for any instrument you desire. Yeah, so here's, for example, the chart for Facebook. Yeah, daily chart right now in today. So you see a couple of situations here. First one, buy T, but not ticked out here, so no trade. Yeah, there we have an opportunity, and that's definitely a winner because we came home. The gray dot on the chart is bringing it home. Next opportunity here, no trade. Next candle didn't tick out the high. There's the trade on the buy T, the new indicator, and will came right home here. So you can learn all this and more when we are working together because we work individually. We work with any of your accounts. If you have 401k, IRA, different accounts besides your margin account that you plan, we work with you in a business plan where we spell out when to trade, when not to trade, how much expectation you should have in a financial plan. We work with money management, so to try to prevent drawdowns or hedge your other accounts in the opportunity that you need it. And we work on trade repairs too that I'm not referring to today. So it's a big program of working together, very focused. Every hour that we are working jointly has at least 1 to 2 hours of preparation. So we are going in that prepared for your individual wants and needs. So that's what we do for 8 hours. Everything is written down in the tutorial. The indicators and the charts will be programmed for you. We work with 2 months of coaching, so to make sure that what we teach you is for you and you are independent after. When you have the software, it's in your system, you can make independent decisions. You don't need somebody calling out when to trade or when not, because imagine that person goes away out of whatever reason, then you don't know what to do. Here you learn what to do and repetitively take trades along with the system. Yeah, and the timeless concept is piggybacked on top. Yeah, so that's our new introduction here. And so how does that scale out and make a money offer? Yeah, trend catching is $7,000, $6,997. The box is extra. We pounded that on it. Then it's the timeless tick concept. A total of 8 hours of training. That would be the value, close to 12,000. But we are offering here today to the participants to come on board for all of this for $6,497. If that's for you, then call us. I'll give you a number in a moment. But the key will be not only to invest $6,500, the key will be think about of what it can do for you. If you have an initial capital of 50,000, you invest 6,500, the remaining will be 43,500 with a 2% risk, yeah, which we say, okay, that's what we can risk per day. Yeah, so with 2 trades a day, that's not much. You are on a way to pay back your tuition in 3 weeks, and then it's yours to keep and it's free. That's the big idea behind that, getting you independent, getting you a fast return on investment after you started. And if that's for you, I don't assume that you push a button now. Either call us or even write us an email at contact@NeverLossTrading.com. I offer you a personal consulting hour where you see and work with me of how these things come on a chart and what they can do for you, so you can count up the good trades and the bad trades with me for going into the right direction. And if that's too much of your budget, I also have a system for traders who say, okay, 6,500 is too much of an initial investment. I kind of cut it in half now with tradecolors.com, and you can always scale up. Many of our clients started with trade colors and then they scaled up to trend catching. You only pay the difference. Yeah. So at the trade colors, we have blue colored uprises, and you have 2 blue that gives you the initial sequence, or 2 red gives you the initial sequence to the downside. And then there's an entry defined, you see it here, there's a target defined by the system, and that's how we work there. There is just not the buy threshold and the stop and all of that, and the risk reward, that's not all on the chart for you. It's a lower level system, but it's a good system, high probability, 65% attainment rate. It's repetitive, it follows patterns, and you surely learn the strategies to limit risk. So let's go through the E-mini S&P 500 contract, a couple of situations here. Day trading, yeah? So 2 of a kind. Let me grab here a pen. Yes, let's see what color we got here. 2 of a kind gives you the upside entry, yeah, and the system tells you how far that reaches. The same here on the reversal, 2 of a kind, and it's there, yeah. So there you have 2 of a kind, but the low wasn't taken out here, so therefore it didn't matter. This one worked, came to target, yeah. So then 2 of a kind, low no taken out is not another one, but here we have next trade situation. Next trade situation. So what I want to demonstrate here to you is repetitiveness. Yeah, repetitiveness of the system, where it gives you clear-cut indications of how to go to market and when to trade. And that doesn't only work for that one chart that I show you here. I have put out a swing trading situation for the ES2. So again, 2 of a kind, situation 1, 2 of a kind, piggybacking on it and trading it in the opposite direction. And I took charts now from different sequences so that you see it's not just the 2, 3 I picked from the last day, February 9. So you have a winning, yeah, another winner, another winner. Yeah, super duper. But then we have a loss and a loss and a win and a win. So that's the key, that you not have 6, 7 losers in a row, so that the system has losses, but it has more winners. Yeah, 8 winners, 4 losses, 67% attainment rate. That's what we strive for, above 65%. Yeah, so here again, you see him, 67% on the ES on a different day in February. And I'll pick him just random, March. 8 winners, 3 losers. And that's what you want. You want repetitiveness, so that at the time where you are available, yeah, because most likely you're not available from 6 p.m. to 4 p.m. of the next day, that there's opportunities that come your way. And if that's for you, the offer is the Trade Colors offer, the timeless concept, as I showed you, 4 hours of training tutorial. Every training session will be individually recorded for you to relearn, a total of $6,644, My special price here for you as an attendant, $2,997. And we are working together individually at your best days and times. Yeah? So it needs to stick with you. Most of the success people achieve is pre-market, we are coming together, and in the market, you already see what you learned if you can apply it. If you do it on a simulator, it's good, but it's better to trade for money because with all we show, there's plenty of opportunities. In stocks, you can buy a few, and with the micro accounts, you can invest in very small increments of risk. So here, what I show you is when you do that, yeah, you have a 65% probability system. You have about 10 opportunities a week. I just kept it conservative. Yeah, the expectation value is to make $663 per week. The investment is $2,997. So in 5 weeks, trading just one contract on ES, you are in. Annual expectation $33,000. The higher level system that I showed you first and one that I'm going to show you is producing more value at the end of the day because it has a higher accuracy and a higher participation rate, so more opportunities to trade for. And there you see how you can scale up. But any of those systems with one contract can be paid back in a relative short period of time. And that's essential. And that's what people do. But you need to trade. You need to get those trades through. If you have it sitting, it's not going to help you. Yeah, so the professional system that I just showed you in calculation looks like that. It has more information on it. Yeah, it has the indicators and it combines top line, our top of the line product, and trend catching and the indicators of the timeless all in one chart. Here you see gold on its development, and it has lower indicators too to support your decision making. You see in this balance of power, when it's blue, who's in charge? Buyers. When it's red, there's sellers in charge. But you know here, that didn't even come through. You see no big signals up here on the top. And then we are catching on, coming out of the purple zone, ambiguity is over, and we are moving towards a long up run. And with that red line, you can trail it. And imagine you'll make the extra money by knowing where is the stop line and how can I trail up when a trend is developing. Yeah, so here is a gold futures daily chart because our charts work on timeless as on daily. There you see, oops, that went ahead of me. So there you see situation 1, clear cut rule, sell 1705.60, bring it to the gray dot as a target. So situation 2, we want to go long. Did it substantiate? Absolutely not, because we work with a buy stop order above the gold contract. Next candle didn't tick it out, no trade. This one we wouldn't trade because we don't trade opposite to the overall channel color. So we're not going to take a short when that is blue. There was a next one, situation 3, coming to target. Yep. Was it in 5 bars? Yes. So everything repeats itself. There's another signal on this one. Yeah, we don't enter at the exit candle. These are all simple rules to learn. As up here, situation 4, super duper buy signal, but not getting substantiated because the price move of the next candle didn't take it out. These are rules that are learnable. Here's on a timeless chart, and you see similar situation. I took the same time frame, but cut it into different increments where we always have a clear-cut relation of risk and reward. And you see in plenty of the opportunities we'll find trades. So what's with situation 3? We have here a marker at bar number 5. We don't trade. Yeah, it was better that way because we would have been stopped. But anyhow, there's more good trades from left to right than bad trades, and that is high probability trading, and that's what we are aiming for. And you see that being done over and over for all different kind of opportunities, and that's what we puzzle together here on the chart. You learn those rules, why there is a floating system here, and it worked, and it has a clear-cut target. Risk reward is in meaningful balance, yeah, and you'll take that and you execute on it. When you know your system is producing more winners than losers, you just take one after another and you count them up at the end of the day, and usually you should strive for a positive balance. Yeah, so here I took May 27, a day where not too much was going on, but we had indication here by 41.90.80. Yep, it came to target 2 candles after. It built a purple zone, but the thing is the purple zone is built after 2 candles. We didn't know at that point in time, so we were in, but here gladly we were out, and then we're coming out of the purple zone, double dip. We go to the upside and trade ourselves home. And then here's a no trade rule. Why? Candle with the number 5 on is not good to trade because it's a sequence that we measure and the probability is low, so you don't want to take him. And here we had another one on this one. So you see, with the professional system here, you have more signals, you have trailing stops, you have more hours of training, and you have more accuracy because you have more indications to read from. And that's what a client said that day. 3 trades, 3 good trades, I'm good to go. And that's what he had. Yeah, so he brought that home and he does that day by day, following those signals. We intercommunicate a lot on the Telegram channel, yeah, because then it's easy to send charts back and forth. And that is a very, very helpful way. So here you see June 3 day trading. I don't have to explain every situation. Look at the red bars down. Yeah, and all these sell signals, could you have taken them? Absolutely, but your charts are not showing them. And when there's a price turning point, they're all doable. These channels we consider as potential breakouts, risk reward breakouts, and with that we'll move along with them. I'll take your questions. I see them popping up here on the right at the end, yeah? And so I definitely try to answer them. And so you see, this was June 3, now you have June 14. I just make it as close to where we are today as I can because I have to inflate here the signals to make them better visible. Trade, home, yeah? Additional trade on top of it, extra piggyback. Trade, home, yeah? Trade breakout, home. So this is how you want to trade. There is a system for it. That's our professional system. And also there I have a special offer here for you as a participant, 6,997 for trend catching. Top line light, there's a full version. We can talk about it when we talk individually, what that would be. Then timeless tick on top of it, total of 10 hours of training. That would be the value. Special offer 9,497. Yeah, and that's a special offer. You don't see us making lower prices because our system was worth it. It was more than $20,000, 20,000 hours to develop all that. Dollars, I would be glad. It helps traders in and out. So if this is for you, yeah, the payback period, if you trade just with a 2% risk on a $50,000 account, should be again 3 weeks if you trade risking $800 per day or making them. Yeah, if you just scale them up one-on-one because you have a higher participation rate. Yeah, and we definitely want to demonstrate to you and want to help you to get that on your charts and to learn the rules. So therefore, write us an email to contact@NeverLossTrading.com and which one of the systems you are interested. We had the trade colors, our beginning, the advanced system, which is trend catching, and a combination of trend catching and top line, which is our professional system. So give us an indication, then we prepare for that meeting and we'll go through the charts with you where you can see on your own how these price turning points were achieved and how many good and bad trades we had in the sequence. So with that said, I have a couple of more things that I can show you, but I'd ask our host, Cherry, if you are potentially helping me.
Here.
Yes, super.
I put up your number. I put up your email. I do have a question for you.
Yes.
From William. William says, can the NLT program and the broker order entry be performed using just one computer, or would more than one be required to do this?
Look, it can be done just in one computer. You only need one. Yeah, so the system runs on Thinkorswim. Yeah, currently only on Thinkorswim. But if you, for example, a lot of our futures traders trade with NinjaTrader, you don't need a second computer. You just pull the dome up and you put your bracket order in there and you let it execute. The advantage of NinjaTrader and Doorman is that you have a break on the margin. Yeah, the margin, for example, for the ES on Thinkorswim would be like $17,800, And on Dorman with NinjaTrader, you only have $500 a trade. And so therefore, that is the way we work right now. We have everything on a free platform where your data feed doesn't cost a thing, but you can execute your order with your broker of choice, yeah, where you like to place your order, but everything comes from the CME anyhow, because the CME is the base of the universe, and we have a direct access platform where the orders go in, and that's where they are executed. So there is no time lag or nothing different. The CME is the CME.
Perfect. Okay, cool. Anybody got any other questions, or did you have something else you wanted to show us before we wrap it up?
No, I think we can wrap it up. I sure have a lot of other things to show, but I think I delivered the core message, and I hope I was able to give a different way of how we trade, and we work very individually with you.
Okay, sounds good. All right. Well, if no one has any other questions, it is right at 4 o'clock Eastern time where I'm at. What time is it where you are, Thomas?
Eastern time, same.
Same as me. Okay. And Central time is an hour behind us. So we're right on schedule. I want to thank you so much for being with us and for sharing this information with our audience. I want to remind everyone this has been a presentation of tradersexclusive.com, and you can find this replay at tradersexclusive.com/archived_webinars. Probably tomorrow. You'll also be getting an email from GoToWebinar to give you the replay while it's up there. And you can also expect our speakers to get in touch with you and send you their offers and, of course, contact you ethically, and you can get in touch with them as well. So I appreciate your time today, Thomas, and I wish you well. Have a good day.
Yeah, thank you very much for having me. Yeah. Have a good day and good trading.
You too. And I'm signing off as well, folks. And here's to trade well.